The following presentation is for educational purposes only. All of the symbols, trading ideas, and live trading are for demonstrational purposes and are not recommendations or trading advice. Past performance may not be indicative of future results. All of the information and opinions expressed by third-party guests are their own and are not necessarily those of Ninjatrader LLC. Trading futures involve substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the Ninjatrader website.
Good morning, everybody. Welcome to Ninjatrader Live. My name is Jim Cagnina. It is May 16th, 2024. A lot of stuff to talk about today. Joining me live from Long Island, New York, the incomparable Tom Schneider, CMT. Tom, good morning.
Good morning, Jim. How you doing?
I'm doing good. I feel good. We have a lot. There's a lot of stuff happening, and it's only Thursday.
Right. Yeah. Thursdays, a lot of times big news days. Today's no different. And we've been talking a little bit about today. It's more news because of earnings. It seems like, kind of a dead period between two Fed meetings. So you have the Fed speaker speaking, but you also get these because it's earnings season. You get these opinions from different CEOs. So yeah, a lot of chatter out there today.
Yeah, and we did have a data dump this morning. It wasn't insignificant. Let's take a peek at that right now if we can, because we had the weekly infamous jobless claims and then some.
Yeah, so that's really where it starts. Jobless claims 8:30, import and export prices is 8:30, housing starts and permits, Philadelphia Fed all at 8:30, export sales, that's the weekly report for the USDA. We'll come back to the numbers because there is a lot more happening. In about 15 minutes, we'll have industrial production. 10 o'clock, Governor Michael Barr speaks. So really, that might be it for the information, except for if you trade natural gas. We do get that report 10:30 on Thursdays from the EIA. So look out for that. But then it's Patrick Harker. He's the Philadelphia Fed Bank president, speaking at 10:30. Loretta Mester speaking at noon. Bostic speaking at 3:50. He's the Atlanta Fed president. And then the Fed balance sheet at 4:30. In there, we have the four-week and 8-week bill auction. That's usual. So I don't think that'll be any kind of make any kind of impact in the markets. But yeah, let's talk about those numbers this morning.
Yeah. And by the way, Williams was already talking today,
oh yeah, so right.
We got some of those, the notable takeaway from Williams this morning, the New York Fed guy. I don't see any current need to raise interest rates. I see inflation in low 2% range by the year's end. That's quite a statement. And around 2% next year, and expect unemployment to rise to 4%. So he's going out on a limb and giving numbers out there like that. And then lastly, he said, we need not wait until inflation is exactly 2% to ease policy.
I think that's true. It's, I agree with that. That's why wait till 2%. But some of that other stuff, I would beg to differ a little bit. But anyway,
but it was bold of him to start, throwing out dates with numbers, I think.
Yeah. That's the first we've heard in a while, I think. Let's talk about those jobless claims. Forecast was 220,000 claims, unemployment claims, and that's a little higher than we've seen recently. Last few weeks, it's been in the 210s, maybe 211, 212. And it came in a little higher, 222. So again, not really worth raising alarms about. It's within a 1% tolerance, which I think is, excusable, right?
Yeah, And this, this is a 2-week trend, right? Previous was 231 last week.
Yeah.
But the 4-week moving average is still 215. So to your point.
Right. It's a little higher, but not much, and like you said, last week was 231. It actually was revised to 232. And so that's lower than last week. Okay. That sounds like it's not a bad jobless report, jobless claims report. Continued though, it was a little bit higher than forecast. So 1,794,000 was the actual. That's about what is it, 14,000 more than was forecast, and it is higher than the previous, so ticking up a little bit. So the jobless claims report, I don't think was that much of a big deal.
Yeah, I agree with that. I mean, the continuous is one of these things we want to look at too, because it might suggest, if that trend continues to go up, that now it's harder and harder to find jobs for the folks that are trying.
Right. Bigger pool looking for the same jobs, if that's the case. Import export prices, I think, came in a little higher on both sides than forecast. So export prices increased 0.5%. Forecast was 0.2%. So that's good, I think, for the export prices, but the import prices increased even more. So forecast to be about 0.3% increase there. It was 0.9%. So we're paying more for the imports. The increase was more than the increase for the exports. I don't know if that really makes a difference in the market, though. It just seems like a little bit of a wiggle room kind of numbers there.
Yeah, I mean, the import, when you compare the import, when you compare month over month, which was a little hot, and year over year, which was a little hot, there might be a little worry there. Exports, on the other hand, year over year were down 1%. So yeah, I don't know. This is one of these gauges that you really got to dig into the report and think. And
Right.
It's early in the morning time.
And which report do you dig into first? I think that's the question.
Yeah. It was a data dump, and we had housing stats and permits next.
Yeah, so forecast to be 1.421 million. It came in at 1.36, so a little light, but up from last month. 1.321 was the previous number, revised down to 1.287. So that number is, what is that? That's more, maybe 5% higher, maybe more. I don't know, about 5% higher. So I think that's a good thing, right, for the housing market. Permits were down from the forecast and down from last month at 1.44 million. And then housing starts, the month over month was a little lighter than forecast. And the building permits change was, again, a miss on the forecast. It was down 3%, forecast to be up almost 1%. So quite a swing there.
Yeah, permits are more important to me because I think they front run the housing starts. Obviously, you have to have a permit before you can start.
Right.
And there's that delay. There's a delay between the two. So when we see 2 months in a row of building permits going down, let's see what the next data point is. So I'm going to pay attention to that month over month.
We also had the Philly Fed Business Index forecast to be an 8, right? This is a kind of a positive negative around 0 number, and it came in at 4.5. So a little bit of a miss there for the Philly Fed Business Index.
Yeah, and previous was 15.5, but it's still positive, right? It's still positive. There could be some seasonal reasons for this. I don't know, but
glass half full.
Yeah, I'm going to be glass half full today for sure.
There you go.
So
have you ever been to Philly?
No, and I'm embarrassed to say no because my brother moved there when I moved down here, and I haven't visited him yet. So I feel ashamed, but I will get there sooner than later.
I was there. Well, I've been there a bunch of times, but a lot of times for business, a couple times for other reasons. And it was a great walking city. I don't know, I haven't been there in a while, but it was great to be downtown and all the history there. Yeah, it was a good walking city. But I haven't been there in probably 8 to 10 years.
Okay. Yeah. So maybe I'll try to get a long weekend in there this summer and walk around with my Nieces and nephew.
There you go.
All right. Well, that's it. I mean, you mentioned 10 o'clock bar speaking, but and then industrial production at 9:15, which we probably already had. No, not yet. A couple minutes. So let's take a peek at the daily charts right now. We got the E-mini S&P making new highs. Today we have a pause after a huge candle yesterday. I mean, high to low, that candle, I can't even do the math, Tom. It was, what's that, 80 handles, something like that. Pretty impressive handle, a candle, high to low.
Yeah, about 70 handles, which 70. Is above the average true range, right? It's actually by about 30%. So that's a big move. It did make new highs in the index, I believe, the cash index. So, depending on how you adjust your data or not, you might see the new high or very close to it, right? The previous peak was April 1st at 33.50. Yesterday was 37.25. So, yeah, that's a new high yesterday. Here, what's interesting is just kind of this market just stopped, right? I mean, it really hasn't progressed. It looks a little bit bearish, but that might be diluted just because of the move yesterday, right? Such a big move yesterday. Here we have not even 15 handles on the range. Okay, what are we waiting for, guys? 9:30, I think.
Yeah, I mean, there's no volume. I mean, the volume is light. 145,000 contracts traded so far in the E-mini S&P. And I don't know. Maybe people. I talk about long weekends, but this would be a 4-day weekend. So we'll see. We'll see if folks pop back in here or not. It's been unusually low volume, with the exception of yesterday, for the last several days. So yeah, we're gonna wait and see. Anything's happening. I'm open-minded today, although the trend is bullish. There's no question about it. So maybe pullbacks are going to be important today as we go throughout the trading day, getting closer to the close. So we'll just see. Like you said, the opening range is going to matter.
Yeah.
Over at NASI is just almost the exact same peak here.
Yeah, exactly. I mean, making new highs. A doji, for all intents and purposes, this is a doji, right? This is 690, 694, where 4 points on the NASDAQ is nothing, right? It's 0.2%. So that's a doji. Sellers did knock it down a little bit. Hey, come on, knock it back to yesterday's close roughly. And so again, we're waiting to see what will move this market, and it might not move. It might be sideways. Like you said, Williams was speaking. Maybe what he said was kind of what caused this market to come back down.
Yeah, I don't know. I mean, very possibly, but he said good things. He was dovish. I mean, he was, right on point for the doves, I think.
Yeah.
So, but anyway, and in the underlying cash market here, we made an all-time high, I believe, as well, right?
Yeah, exactly.
Yeah. Dow, on the other hand, well, never mind that. It's looking the same. I don't know that we hit that all-time high in the cash with Dow, but I mean, the last 3 candles look exactly the same.
Yeah, exactly. Yeah, same thing. Sellers knocking this down. Doji looking candle. We're almost to the tick at the same open where we opened. But what's interesting is that 40,000 level, we're still above, but we're right there. So maybe that psychological level will hold a little bit longer than, say, if we were at 4175 or 4150 or something like that.
I agree. Russell 2000. Let's see what this guy's doing. So a little bit, well, again, bull market here. I got a nice trend channel going on. RSI is pretty high. Moving average cross happened on May 3rd. A little bit of a pause, maybe a little bit more negative here than in the other stock index futures.
Yeah, just not quite getting that lift above previous highs that the other one did. Although, like you said, looks fairly bullish, right? Because You're still got higher high. You're above your moving averages. You're above the cloud on my chart. I've got different moving averages and what's than you have shown. And my long-term 50, my 50 period moving average basically came in supporting that consolidation phase we had last week. So, this is a very supportive market right now. And this could just be the one market of the four that buyers are not participating as much, because if it's risk on, I'd rather be in maybe the NASDAQ or the S&P than the Russell, generally speaking.
Yeah, it was interesting today. They were talking about the Russell and the small caps on TV today, and on the telly for our friends in the UK.
Right.
And one fellow, I can't remember what analyst it was. He threw out a stat like 40% of the Russell 2000 companies aren't profitable. Like they're having a hard time becoming profitable. And I want to fact check that. That didn't make any sense to me. So,
well, I would say that kind of makes sense and bear with me, because companies don't become profitable for quite a while. The average company, right? So you think about a startup, you think about maybe a small business that might be in the Russell eventually. It takes them like 7 years to become profitable. So if that's your base, and then maybe you hit some headwinds because of the economy, right? Inflation goes to whatever we had 2 years ago. That's really hard for these companies. So I'm not surprised. Maybe it's not as an average 40%. Maybe it's now.
Yeah, it could be. And there is also some I believe their annual rebalancing is coming up.
Oh,
so
for the Russell.
We'll see.
Yeah.
As I recall, I think that's coming up this soon. We're right up against it.
Okay.
So there might be some different components in there, but it's pretty diverse. So I don't think we're going to see that much of it's a very diverse basket of stocks. So I don't know that we'll get too much movement.
Right.
All right. Let's keep moving. Let's get those. That's just the way the stock index futures, folks. You can see it's all red on the board, but it's kind of like unchanged. It's not big numbers either way. Gold is down 12 right now. Let's let my data percolate here a little bit and see what this daily candle looks like. Broke through my area of resistance. So now I got to move this rectangle up to here. Highest body of a candle. And, we're not to the piercing line yet, Tom. 12.5% harmonic.
Yeah, and this is looking kind of like, okay, a reaction to yesterday. Yesterday's exuberance. Mm-hmm. Maybe it's a little bit of coming off of that big move up, a little bit of a retracement. I saw all green except for energies yesterday on my market analyzer. Today it's almost the opposite. And I say almost because the grain, the agricultural complex is up as well as it was yesterday. So kind of bucking the trend of maybe weak dollar, strong dollar, that concept.
Yeah. So we'll see how this goes. I'm totally open-minded in gold today. I think we might have a little bit of volatility here. Just short of that 24,000. We did wick through the 24,000 though, Tom. 2,400. Sorry.
Right. Yeah. I think Mike might have pointed out 2,350. Maybe it was Jimmy Iorio. But I know Mike likes those 20 levels too. Maybe that isn't gold though. Maybe that's the Russell. It's funny because they're priced about the same amount, right? In the 2000s, 2,400, 2,300. I think Russell's at 2,000, 2,100. So I get confused sometimes, and the charts look very similar.
Yeah.
But yeah, it's looking like today's a little more bearish, but we're still overall in an uptrend, longer term. So, this might be a contra trend day.
Yeah, we'll see. Crude oil right now bouncing off a nice area of support here. Not quite achieving the perfect head and shoulders, but we're still a work in progress here. This area of support is approximately 78 even.
Yeah, and we've talked about that 78 to 80 range that it's been in for now 2 weeks. Okay, 80 might be your top end. Maybe it's 79.50, but um, today looking a little more bullish, right? You had a big buyer's wick yesterday, pushed this market up and tested that 8-period moving average. Right now, trading above it. So
Yeah.
if we stay above it, higher high, higher low, cross above a moving average, moving away from support, trying to get that second moving average, looks pretty bullish for crude today.
I agree. I mean, and again, this is off a Wednesday number, right? This big buyer's wick right here that you just referred to.
Yeah.
That's pretty impressive. Yeah, I agree with that. So looking pretty positive. And there's no wick at the top of the candle right now. We're driving upward.
Yep.
All right. We got some time left. We got plenty of time left. We got all day. Well, maybe not all day.
All morning.
All morning. Let's go to copper. Dr. Copper there. Well, it's been a great run for copper. It's not over yet. Although we had yesterday's candle was interesting, Tom.
Yeah, that was interesting. Big wick, small body, new highs, or relatively new highs we haven't seen for a couple years. Pushed it over 5, right? Third day in a row we've traded over 5 for copper. Although today, this is kind of looking like almost a classic reversal pattern, 3-bar reversal pattern. I'd want to see a little more downside, at least to halfway point of the bar two days ago. That piercing line, even though it's not the same, the next candle. But this is looking fairly bearish today, although I'm open because in the longer term we're still bullish.
Yeah, no, for sure. And I agree with this potential reversal pattern here as well.
Mm-hmm.
I think long term, like calendar year 2024 and beyond,
yeah,
I'm bullish right now, copper. I mean, the story is compelling to be bullish, right? The electrification of the world, in addition to powering artificial intelligence. It needs some copper for that.
Did you see the stories about what were you talking about? Well, now copper is getting expensive enough that the people are kind of looking for the people. I don't know, bad actors are looking for sources of copper in all sorts of places. There's a Tesla charging station where all the cables were taken because of the copper in the cables.
Yeah. Did you see my tweet?
I think yesterday? I did. Yeah, I did.
Right. So when we lived in Chicago, we had one of these old houses, right? It was old. It was 100 years old. And it had copper gutters. So they're patinaed, right? Obviously, they didn't look copper anymore, but they were green, patinaed. Right. And every morning I was worried about those things not, being stolen in the middle of the night.
Right. You go to sleep with your eyes wide open, right?
I know. Luckily, it never happened. But oh boy, crazy.
I've got right here. I've got my copper ingot right there.
Don't show that to Mike Burke. He'll get jealous. He'll want that.
From Copper Country in Michigan.
Nice. All right, let's keep moving here. So yeah, we'll see if there's a real turnaround here today. So be careful with that today. Let's go to Bitcoin. Bitcoin, we're on that 66,000 level right now. So it's, broke out of our seriously yesterday, broke out again. Risk. This is a risk on candle. We broke out of our wedge here. I'm going to delete the top line anyway. And now this is like a stock index future. It's kind of like, all right, pause. What do we do now?
Yeah. Well, there was some news. I don't know if it was yesterday or this morning about the CME. Did you hear that? Let me confirm this. CME trading spot Bitcoin.
It could be a Clearport market there. I wouldn't be surprised. I don't know. I don't know. I didn't see that story.
Okay.
We'll do some research though. We'll get that to everybody.
Yeah, we'll have to look at it. It's something I saw again on X as I was looking through, and it looks like they're eyeing it. I don't know if it's for sure, but that would mean a lot for those big institutions that want to invest in Bitcoin because they already have a relationship. I think that was the angle they were taking with the CME rather than opening up a wallet with Coinbase or whatnot.
Okay. That makes sense. That makes a lot of sense. One of the Fed officials yesterday said Bitcoin is not an asset, nor is it a security, and it's not tradable. I don't remember which who said that. One of the FOMC people said that yesterday. I'm like, well, it is tradable because people are trading it.
That's right. That's right.
Oh, that was interesting. But anyway, JP, real quickly here before, Jamie Dimon this morning, inflationary forces in front may keep rates higher. That was one of those red starred notes that came across my screen.
Got it. By the way, Jim, I want to give special shout outs to the first ones in the chat today.
Yeah.
Jen P and Aviator, thanks for being the first ones in the chat. You get a special shout out. We have 2 chats, YouTube and ninjatrader.com/events. So you can join us there. But for being the first ones in the chat, Jen P and Aviator get a special shout out. So thanks.
Jen P Aviator, get another special shout out. Thanks again. Appreciate you guys being here. It's very important. It's very, it's overwhelming. It's wonderful you guys are here. Appreciate everybody being here with us today.
Yep.
All right, so Tom, let's take a really quick break and we'll get right into the opening range.
Great.
So, you want to be a trader? Well, you should know you're not alone. Over the past several years, record numbers of people have set up their very own online trading accounts. There's never been an easier time or more inexpensive way for do-it-yourselfers to get started trading the financial markets.
Better futures start now with the Ninjatrader mobile app. With the power to customize how you trade on the go, you can quickly and easily place trades with a single swipe and view index, financial, energy, metal, crypto, and more futures markets, and access over 40 built-in indicators plus custom indicators, all from your phone. Stay up to date at all times by enabling notifications. Get started today at ninjatrader.com.
By the way, we are back, folks. I just wanted to share this screen. This is kind of a new website that came to my attention from the Live Squawk owner and founder, Harry Daniels. And I just wanted to point it out. It's pretty cool. It has news feeds. It also has audio as well. And so when there's a message, you hear it. And a whole bunch of other stuff, a lot of clickable stuff, like industrial production just came out and you can click on little arrows and get more information on it. It's pretty slick, by the way. So I'm going to keep experimenting with it. This is only my second day on it. It's called livesquawk.com and it's super cool. Anyway, Tom, sorry about that.
Yeah, I think the cool things about those squawk boxes are, the information's pushed to you, so your ear gets trained. If you're sitting on a trading desk, right, your ear gets trained at certain times of the day for certain days of the week. That information, you don't really have to remember to look for it, right, or set an alert. It just comes over the squawk, and you know that when you hear that voice, that very distinctive voice, depending on what markets you trade, you would listen and say okay, and you don't have to be taken away from the screen you're looking at. So pretty cool stuff.
Yeah, for sure. So Tom, we did have industrial production come out just now.
Yep. Yes, we did. If you want me to tell you, production year over year, industrial production was down 0.38%. That's a year over year change. Previous report was flat. So last month's report was flat. It's ticked down slightly. I don't know if that made a difference in what's happening in the market. Hard to say. We were in a downtrend already, and that number came out at 9:15. So where is it reflected? Probably in the bar that's 2 bars before the current one, but we were already in a downtrend, so I don't think it's a big deal.
Yeah, no, I agree. I agree. And the month over month number was 0, and it was estimated to be 0.1, so a little bit of a miss. Capacity utilization was right on target, 78.4%. Estimate 78.4%, previous 78.5%. So that was kind of perfect right there. So
Yeah,
not a big deal. I agree with you on that. So now the opening range is kicked in, right? This is the first opening range candle, 9:30 candle, the start of the candle, and we do have a little bit of buying coming in, and pretty close to that magic 53.33 number, Tom.
yeah, and it's got that really nice 3-bar reversal that I like. It'd be nicer if this candle were a little higher, equal and opposite to the previous candle, but it's right now it's being supported by yesterday's close, really nicely. Like yesterday's close informed us pretty well of where there might be a support area, and it just played out that way. And interesting because we have before 9:30, that's when we arrived there, and then after 9:30, and it held. So, I would say retail and institutional, here we are, we just started. Retail and institutional kind of are in the same idea that, nope, you know what, this is a great buying opportunity, let's go north.
Yeah, and so interestingly enough, look at this. Interestingly enough, I put a rectangle down here around the close for yesterday, and we wicked through it, and then we had a smaller red body candle that also wicked through it, but then a turnaround, right? It's almost like the collective marketplace decided, all right, this is support, and it's pretty keen level of support, right? So let's get busy and start buying, and that's, I mean, we're already up to VWAP almost.
Yeah, big move up here at the open.
Yeah, look at that profile, Tom.
Yeah, it looks great. I mean, that is like almost textbook, right? If this volume outside of the value area was a little bit less than the downside, you have a nice distribution. But that point of control kind of in the middle of the range, market trying to get back up there, which is right around VWAP. If I'm bullish, I have certainly a target, that I could use in the near term.
Yeah, so for sure. And the fib line here is a little tricky because you have this big, huge shadow on the top of the 8:30 news data dump candle, we'll call it.
Yep.
And so if you wanted to judge that as a trend, you could, and you could measure it. If you wanted to judge the whole session, I think you could do it. Even though we were sideways for a long period of time, let's just try that and see what it looks like. High to low. And again, we're measuring a segment of a trend, right? So there's a whole bunch of trends you could kind of pick off here throughout this session: an upward trend, downward trend, sideways, up, down. So you could add multiple fib lines to a view if you're not sure what the best one is to look at. So this one right here, though, I mean, we're in a downward trend all day, all session. And, again, 37.5% classic retracement level, really 38.1, but close enough for government work. And we didn't get to 50 yet.
And that 50 is right at the point of control, and it's right above the VWAP, which that VWAP, if we start trading above it based on the volume, will probably, move up a little bit faster than if it were, let's say, pre-market, with less volume.
I agree. We'll see where it goes, but that just kind of really highlights the fact that this is a really kind of, picture perfect order flow volume profile histogram on the left, where you have that point of control exactly in the middle.
Right.
So that's pretty good. And not only that, we were pretty close to previous session's highs too. So that's, right
now
there.
One thing we don't get from this chart is how much how much the range that we've traded today, how much is it of the average true range, right? The daily average true range is about 56 handles.
Mm-hmm.
We're trading about, what is that, 14 handles on the range day? It looks impressive, right? Looks like a normal trading day, but it's just not a big trading range. There's not a lot of volume. We haven't even cleared 200,000 contracts yet. So, in days like today, lighter volume, we might not see that range. Although we could if this market gets directional. But just remember that this is kind of a tighter trading range than normal, right? Not a lot of wiggle room here.
Yeah. So I just added the ruler. So this is the trick I learned yesterday, Tom.
Yeah.
So I added the ruler, right? The pencil tool up here in the upper left, and you just you select ruler. It's a triple click though. So you click at the bottom to whatever distance you're measuring, horizontal, vertical, doesn't matter, all the way up to the top, double click. And then it tells me, hey, Jim, you went 13.25 in the Y value. In other words, 13 and a quarter points.
And what's great about that is the ruler will, like you said, X and Y direction. So you could say, between the two clicks, not only do you get how much you moved in price, but it'll tell you how long it took you to do that. Right.
Yeah. So, and I was doing it on support and resistance levels. Let's just assume I'm going to draw a rectangle at the top here. Instead of the rectangle, I'm going to use the tool. Again, I'll just click on the ruler tool. Yeah. And then I'm going to go, we'll start it here where I'd start the rectangle and go all the way across to the final, where we're at, double click. And it's going to say, hey, Jim, 45 bars. That doesn't sound right.
Yeah, that's right.
That's right. Yeah. And so it tells me how long this area of resistance has been going on for.
But Jim, you could even do, how long did it take to go from the top to the bottom?
Okay,
right?
So
from
that's
the high
a
to
good
the low.
one. All right, now
right?
we're getting fancy, Tom.
Yeah.
Let's go. I'll go to ruler. So just peek up here.
Yeah, right there. So we were at the top there, and just go right to the bottom.
Boom. Oops,
so
I got a double.
That's good.
Oops, sorry. And there we have it. 58 bars it took. 58 10-minute bars. Time at 9:40. And then we lost 13, handles and a quarter. 13 and a quarter handles.
Yep.
That's some fancy ruler there. I just discovered this. We're gonna have a lot of fun with this guy.
Right. And that 940 is not the 940 bar. That's how many. It happens to be the 940 bar because that peak happened at midnight. But that 940 really reflects the time that it took to go from high to low. Right. So it's
9
not because you're
40 minutes.
It's just coincidental that the high was at the midnight bar. But if you had, if it were 5 bars earlier, you'd have a time of, let's say, 10 and a half hours rather than 9 and 40 minutes. That makes sense.
Yeah. If I put this trade on, I could go to bed, have a 9-hour sleep, maybe even longer, make a cup of tea, come back in, take it off, and I would have hit the high and low.
It's not as easy as that, everybody.
No,
just
not,
don't. We can't. It is not that easy. It's not what he's saying. By the way, Jim, I do want to maybe if we could do a little bit of a quick tip, because we got a question in our email inbox last night.
Okay.
And we had a viewer asking, how do you, Jim, you have in your market analyzer, in your energy section, you've got 5 crude contracts. You've got June, you've got July, you've got SEP and DEES and all that, ACH and DEES. So he was asking, how do you get that? And the answer is simpler than you would think. So because you're in control, I'm just going to walk you through this, Jim.
Yeah, and I have a ninja shortcut, but go ahead. You walk me through it first.
So just start typing. If you've clicked into the market analyzer right there, anywhere, start typing. Let's say type in. Let's do NACS. Let's do NG space 07-24. I'm sorry, zero,
No.
not O.
Do we want to say July?
No, I think you need to
JUL?
do the numbers. Let's do 07 instead of 07.
Oh, my bad. 0724.
-24.
All right. And hit
And
enter.
then enter.
Wow. Look
And-
at that. I'm going to drag it up.
And the reason why I want to show that is because it's intuitive to right click and add an instrument. But
Yeah.
I was like the viewer, I was not having any success with that. And then I realized you don't need to do that. You could just start typing. And if you want to do September, you want to do December, whatever, all you would do is type in the right contract, symbol, space, calendar month, calendar year, separated by a dash, and it adds it to the market analyzer. Then you can drag it up to where it needs to go.
Oh, that's way better shortcut than what I was going to do.
Uh-oh.
So, no, I would just take like I would take a quote at the bottom, like MCL,
Yeah.
double click on it in the market analyzer, and it'll let me change it. So if you can see at the bottom, my mouse is moving around. It'll let me change it. Then I hit enter, it changes it. Then I could adjust it to the proper category, and then I could add that MCL market later.
Right.
So
I think it's
but
just,
your shortcut's way better.
yeah, just start typing.
Start type, just like Dory, just keep swimming.
See, it's
Sorry
funny,
about that.
Jim. I could tell kind of when you had your kids by the movie references you have. So I know you weren't probably as an adult without kids watching Pixar movies, I'm guessing.
I'm going to say Finding Nemo. I don't care how old you are. If you don't like that movie, I can't help you. If you didn't enjoy it, we cannot help you. I agree, though. I agree.
Yeah.
Anyway, all right. So VWAP's holding so far in the E-mini S&P. Let's take a peek at some of the other ones here. At micro NASDAQ right now, a little weak. A lot of separation between volume weighted average price and price right now. So this market, the sellers are a little bit more dominant right now. And we're kind of just tracking right at that previous session's close right there.
Yeah, and look how nicely that it's holding as resistance. So where we saw in the E-mini, there was a little bit of support at yesterday's close. NASDAQ, as we know, gets a little more volatile, making new lows on the open. And as we often see, opening range, we have a directional candle. And then the second candle, sometimes we don't see that follow through. We see a turnaround right now, kind of in between. It could still follow through, but yesterday's close seems to be where this market wants to be right now.
Yeah. And, really, this is the most interesting candle here right now. I mean, we have this 830 to 840 candle, and buyers took us all the way up above that 733 level. But this was a complete failure on the part of the buyers. They failed. Sellers said nope, and then not only brought us back to where we started, but then and then some. So generating a benchmark or a dominant candle, which we haven't penetrated yet at all up until the present moment here. So and interestingly enough, that previous day's high is almost in the midpoint of the body of that dominant candle, along with VWAP.
That makes me wonder the fact that sellers came in on that kind of reaction to the 830 data dump is good news. Good news is bad news, vice versa. Is that over? Because I wouldn't call those reports good news, right? There was nothing really good about them. Wouldn't say they're bad news necessarily, but if you had to pick a side, slightly bearish, that news. The market responded in that way.
Yeah, I know. And it's a low volume day though. So you're going to get this, a different profile of types of traders today. Right. And it's not Fed news. It's not earnings news. It's, a weekly jobless claim report. Right. So,
right.
And it wasn't outrageous. It's well within one standard deviation. I mean, it wasn't a crazy number.
Right.
So,
now, one thing that goes through my head, Jim, though, is today day before options expiration, sometimes we do see some directions, directional trading. We see that these hedges are being unwound, so they don't always get unwound on options expiration. Usually you see them get unwound the week of.
Yeah.
And seems like there's a little more volatility the day before options expiration and the day after. So I'm wondering, maybe it's just a matter of waiting to see where the market's going to be before those hedges are unwound. And we'll see some direction at the end of the day.
That's a great observation. That's a really, I mean, right. So now we have dealers having to worry about their customers, options positions, right? At the end,
Right.
Going into expiration. That's a great point. So there's going to be a lot of that, a lot of those forces today and tomorrow. I agree with you. So, but I'm still looking at this VWAP here. I pretty circled it again. Nice kind of. We'll see if that volume weighted average price keeps kind of arcing down. But I'm looking for a touch point back up here. As long as the VWAP doesn't just go straight across for a long period of time.
Right.
That's it. Yeah. So, hey, by the way, Tom, who's
Brian.
coming on?
So
when is he coming?
Tomorrow we'll have Brian Shannon on.
Okay. So it's important you guys come to that. If you want, we're going to give away, I have it right here next to me. I'll mail it to your house. We're going to give away, if you're, in the US, I'm going to, his anchored VWAP book, right? And Tom's going to show us a picture of what it looks like, maybe. Yeah. So if you come tomorrow, if you come to see Tom and Brian tomorrow, and I believe that's going to be at 11.
Yeah, that'll be on the Traders Workshop portion of the show, which is 11 o'clock.
Yeah, we will reveal to you then how you could compete for this book. It's a great book. I just finished it. Tom finished it, and I got an extra copy, so we'll mail it out. So come tomorrow and pop in there, and we'll tell you how to maybe get one.
Yeah, Brian was kind enough to supply us with the books, and he supplied one for one lucky viewer tomorrow. So he's just kind of done some great writing on anchored VWAP, had some great insights. I really enjoyed reading the book, and it kind of enlightened me, and I think Jim, you as well. You're putting some of those ideas onto the chart, right? You're talking about them.
Yeah.
So it is kind of opened up my eyes about VWAP a little bit. I love the anchored VWAP, and I just want to talk to him and see kind of what he's thinking about it. The book has been out for a little bit, so I'm sure there's always new things happening. But you can follow him on Twitter. He's pretty active on Twitter. But we'll learn more about it tomorrow.
Yeah, no, for sure. I'm really looking forward to that because it's the thing about the anchored VWAP. It's a great tool that we have on Ninjatrader, but it's a good tool, period. Right? It's a good thing to add to your chart. And I was reading, when I was reading Brian's book, it's not written over my head, which isn't hard to do, by the way. But but it kind of reinforces other kind of common sense things in trading. It kind of brings them back home, right? I enjoyed it, right? What did you say? FOMO is now
Jomo. I thought that was great. I don't know if he originated. I want to find out, but that's the first time I saw it.
Yeah.
The joy of missing out, right? And that's about mindset. That's about changing your mindset about trading. But I've got a lot of things that are banging around in my head that I want to talk to him about, and can't wait to have him on. It'll be his first time on the show.
Yeah, for sure. Looking forward to it. Super nice guy. All right, so we're still speaking of even numbers. We're on that 700 number, Tom, 18,700 on the micro Nasdaq. We're having a hard time getting up into my rectangle, right? We're trying, and I did add an anchored VWAP from the opening range, and I'll kind of keep extending that outward as the day goes on, and we'll see the difference between the two.
By the way, I just want to point out, we released this, and what I mean by we is Ninjatrader, product management and software developers. We're working on an anchored VWAP tool and released it in April, released it about a month ago. Coincidentally, this isn't what made us look for Brian Shannon and bring him on. It was our interest in what he was doing that brought it on, and it just so happened that tool came out, and timing couldn't have been better.
Yeah, but do you think maybe something was in the ether back then? And it all kind of it was a prophecy that was fulfilled.
That could be.
That
could be. Past performance not indicative of future results.
Let's go.
I'm waiting for it. No. There it is. All right.
Russell 2000.
Thanks for that mission control, by the way.
Yeah. Legion Reaver, hopefully I said that right, says, could lack of volume people could there's this lack of volume because people are waiting for the Fed talks. So I don't know. I mean, I think you'll get a little volume when the Fed speakers speak this week. There's an awful lot of data already kind of digested into the marketplace. And from today and tomorrow, I don't know that if one speaker is going to generate a huge amount of volume today or tomorrow. I don't see that to be a thing. I think, right now it's for whatever reason, I think, the institutions are happy and everybody else seems to be happy to go along for the ride. So that's what I think is happening here. Earnings aren't that bad. I was talking to Blue on the phone the other day, a couple days ago, and he's pretty. I wouldn't say he's dovish, but he's pretty confident that things are okay. And his point was, yeah, earnings are decent. They're not bad. They're not fantastically great, but they're still good, and that's giving resurgence to everybody in the equity market.
Yeah, I think about the Fed talks question. There are a lot of speakers today, tomorrow, but Powell was Tuesday, right? Jerome Powell spoke Tuesday. I think if anybody's waiting to take a side in the market or express their opinion about the market, that would have been the time they were waiting to do that, because Chair Powell probably has the most weight of any Fed speaker. Maybe John Williams, New York, people might wait for him. I don't know, but I think it's just more about the information coming out. We had a lot of information Tuesday, Wednesday, and maybe they're waiting. There will be some volume on options expiration towards the end of today and tomorrow, but I don't know if it's the Fed speakers. There are a lot of them, and the question becomes, who do you listen to? Is it a president? Is it a governor? Is it the vice chair? I think there are two vice chairs. Philip Jefferson is one of them. You have some new bank president. There's a lot to think about, even though it's less than 20 people that might be speaking. So,
yeah,
I think the focus is Powell. If they're going to wait and low volume until then, I think that would be Powell.
Yep. I agree with that. And Tom, well, thank you for being here, Legion. Yeah. We appreciate you. Tom, there's a bunch of great people here as well.
Yeah, for sure. The Lieb is here, Paulie H, Mark R, Hitta, Eric H, Scott K, Simon W, Miho GDP 29 is here. Mom and Dad Kags, good morning. J-Man 2005 from Las Vegas, At Home ATM, Byron P, Foggy Cape. Okay, I'm going to try and say this right. TR4 GIK 11. So
that's tragic 11.
Oh my gosh, Jim, how did you see that? Is awesome.
Here's the thing. I'm bad at reading those license plates. I'm terrible at it. But
yeah, I'm usually good. That's why did you get it?
No, because Mike Burke caught it a couple of I don't know, in the past, and I heard Mike say it, so I just remembered it. That's all.
Okay, tragic 11. I'll go with that. I like that. Elizabeth Zula, I can read that. Elizabeth, welcome back. 6-string Dow. Ames is here. Robert W. New here is here. Glad to see you here. New here. Raleigh Hitta again is here. Stephen Rios, James, Ames, Eagle, Carlos, New York Yankees. Learn and be happy. John E, Gareth C, Bow Hunter, Legion Reaver, as we mentioned before. Anissa, good afternoon. Deepak is here. Lewis H, AA Ron, Danielle, and Steve. What a great group, Jim.
Absolutely, man. We appreciate everybody being here today, joining us. And remember, there's a lot of new people. There's a lot of experienced people. There's everything in the middle, and appreciate everybody helping each other out. It's a great community, and it's not because of me and Tom and Mike. It's because of you. So thank you for being here.
Right.
Gold, Tom, is selling off here. This is kind of a really nice sell-off chart. No, we have a little bit of a base going on so far in terms of support. Well, whether or not it will hold or not, I don't know. I mean, we have an equal and opposite candle here, and this is kind of, I'm going to kind of do my best Dan Graham's interpretation right now. We have an equal and opposite candle, 930 to 940, 940 to 950. Excuse me. And then we tried to close through the midpoint of the red candle, and we failed. And we're trying again, but we're still failing. So right now, again, a little bit of profit taking coming on right now. This is not a trend reversal, I don't think, Tom.
Yeah, no, this looks that failure to trade up looks fairly bearish. But you might see some continuation on this candle. It tried to get above that midway point. The pivot holding nicely as resistance so far since we've closed below it twice. Overall looking fairly bearish, and it might be one of these days where you just wait for a rally to hit the 1 standard deviation band below the VWAP. If it rallies more, then maybe the VWAP is the guide, and wait for it to turn back around because it's looking bearish.
Right there. I put an arrow there, Tom.
Yep.
We'll see how that goes. Right, bottom of the value area. Pivot is right there in play right now. Gold's down a lot, 14, almost $15. So we'll see how that goes. We got time. Crude oil. Let's go to crude. Well, that's an interesting chart.
Yeah, R1 looking like it didn't hold resistance so well, but it actually, you could argue that it did. It got above R1, closed above there a couple times, 3 times. Now turning around and heading south. This could be this is where I want to look at my cumulative delta study on the crude, and it's kind of acting as you would expect, although that big dominant candle 3 bars ago, half hour ago, that big move up, that brought a lot of buyers in. This red candle, which is almost equal and opposite, hasn't brought the sellers in as much. Okay, so if you would kind of expect maybe some parallel trading happening, but it just really isn't bringing that accumulated balance or imbalance, if you will, of buyers and sellers back down with this move down. So, maybe this market just wants to stay up. This is just a quick pullback before we resume the uptrend.
Yeah, and the delta, just for everyone's reference, is the differential between the number of trades that happen on the bid versus the number of trades that happen on the offer. Offer, if the percentage is high on the offer, it suggests upward movement. If the percentage is high on the bid, it suggests downward movement.
Right, and that's how we identify buyers and sellers, right? If you go to market, you say, I'm going to buy, right? I'm not putting a limit order in. I'm just going to buy the market. You're buying at the offer. You're taking what somebody's offering. You don't really have that much control, right? You're not saying, I want to buy at this price. Just give me the market price. You're going to get that at the offer price. Whereas if you sell, I want to sell at the market, I'm not worried about a limit price. You're selling at the bid. It's what somebody will pay.
Yeah.
Right.
Yeah. Absolutely. Now we're breaking down, Tom. This is turned into a bearish engulfing if you compare it to that previous dominant candle that you just talked to. This is looking like we have potential to drive back down to the VWAP here in crude oil. And I'm going to put another ellipse there because that might be an opportunity. It might be an opportunity right now. Remember, in the crude market, pretty much most of the stuff that we've assimilated most of the data, the API numbers, the EIA data, the International Energy Administration data, the SPR status of the SPR. So all of that stuff has already been released. It's out right now. So I don't expect anything jarring. We have 2 more weeks before OPEC plus, so or a week and a half. I can't, end of June 1st. So this could just be regular kind of cyclical market behavior.
Yeah,
wave like. Oh boy, we got another minute and 15 seconds before the end of the opening range, and then we'll start looking for some trade setups. But Tom, you mentioned Walmart. Walmart was a beat on the earnings.
Yeah, Walmart had so that was this morning, right? Walmart reported earnings this morning. It was a beat on earnings. The earnings per share was estimated to be 52 cents. It came in at 60. So that's, pretty nice size beat. It's over 10%, almost 20%. Probably about 16, 17%, but the revenue was a beat too. So they're making money. $158 billion was estimated. It came in at about 161. So maybe 2% beat there. Shares were up 5% in the pre-market. So, that could explain maybe some movement in the Dow. Dow's, versus the Russell's down, Dow's up. The other thing, their forward guidance, so kind of what they expect for the next earnings report, they're expecting slightly higher than forecast. So I think they're forecast to be about 63 cents per share, if I recall. They're forecasting anywhere between 62 and 65. So you tend to look at what the higher end is. And their higher end range is higher than what is forecast. So, good news if you own Walmart, which hopefully a lot of the pensions and 401ks do.
Yeah. Before we go to break, though, I'm gonna give you a pro tip on Walmart.
Okay.
Look for, and they have these every once in a while. Look for if you need a smart TV, a flat screen. I guess they're all flat screen now, but a smart TV, Roku smart TV, a big one. A big one. Yeah. You wait for the Walmart. They have these sales at Walmart. And it's incredible. They're cheap as chips, and it's and they're pretty high quality. Anyway, that's the pro tip for Walmart.
I like it.
All right, let's opening range is pretty much near completion here. Let's go ahead and take a really quick break, and we'll look for some trade setups.
Awesome.
So, you want to be a trader? Well, you should know you're not alone. Over the past several years, record numbers of people have set up their very own online trading accounts. There's never been an easier time or more inexpensive way for do-it-yourselfers to get started trading the financial markets.
Better futures start now with the Ninjatrader mobile app. With the power to customize how you trade on the go, you can quickly and easily place trades with a single swipe and view index, financial, energy, metal, crypto, and more futures markets, and access over 40 built-in indicators plus custom indicators, all from your phone. Stay up to date at all times by enabling notifications. Get started today at ninjatrader.com.
All right, we are back. My name is Jim Cagnina. This is Ninjatrader Live, and joining me side by side here is Tom Schneider. Appreciate everybody being here today.
Virtually side by side.
Yeah, virtually.
Virtually.
It's a virtual world, Tom.
Yeah,
we were talking about those Apple goggles, $3,500 for the low end.
Yeah.
I don't get it.
Well, we have somebody trying them out, I guess, for us, and that's interesting. Yeah, I don't know.
I could blink and make a trade, right? Just
right. Right.
oh my
Right.
God. Don't get anything in your eye. It'd be
Yeah.
like doing a lot of round turns.
I yeah, you know, it's interesting. It's going to, if that takes off, if people adopt that, which eventually they will, because they will, it just will change the way we work so much, right?
Yeah.
I mean, if I get these glasses, do I need a monitor for my computer? Probably not, right?
I guess I'm not putting one of those things on my head ever.
Okay, yeah, there you go.
Just so you know, I like my mouse. I like my mouse. All right. So what's some good? All right. Oh, I love this. I love this setup, Tom. Let's go to the micro mini S&P. Where is it? MES. There we
There
go.
you go.
Boom. Volume weighted average price is your friend. I mean, it's holding as resistance pretty keenly right now. Opening range is over. Data's been assimilated more or less. I look at that point of control. It's perfect. It's we should take a snapshot of that and put it in a book. So I'd be looking for a couple of units to try to get short here if it's not too late. What do you think?
Oh, I like that. I like that, confluence of kind of where the VWAP could be or where it is now, right above the point of control. We might have missed that area. Although it could come back and try to wick through or test it again.
Yeah.
But it's looking pretty bearish. We've been pretty bearish since about, I don't know, 11 o'clock last night, 11:30. News didn't really lift this market too much. So yeah, I would say selling the VWAP wouldn't be too horrible here.
All right. So you're saying selling the VWAP. I was going to say point of control. So we'll go a couple ticks higher. That would be kind of unit one. Now the other thing, right? This is one lot trying to sell one at 53, 35, 75. The second thing I'm seeing, Tom, is because the value area is so nice here.
Yeah.
And we have a really, really nice previous session high right at that 50% retracement. I could envision a wick through it for a second unit.
Yeah. Yeah. We're trading the micros. You could do that. Yeah.
Let's do it. So we'll get a little bit of love to the upside. Maybe we'll get a position for a drive back down toward the actual close from last night. And then from a stop loss point of view, there's all sorts of potential areas here. I'm going to use this.
Yeah, that's right where I saw. Right.
Yeah.
And you can extend that rectangle to the left a little bit. See that it was tested earlier. Right there.
Yeah. Yeah.
Yeah.
So
I think
so we could be kind of driving back up to that target wick if that's the case. So
yep.
I'm gonna throw it up right there. Using the chart trader, folks, the real-time simulated live Ninjatrader trading platform. Past performance not indicative of future results, and we'll do a lessons learned on any trades that may or may not have happened. So far, this one's not. Nice big sell-off here. I think we're directionally correct, Tom. We might have been a little late to the party. We had 1, 2, 3, 4 candles that tried to bump up close above that 50, that 35. Well, we rounded up to 36, couldn't do it. And so right now volume is pushing this thing down a little bit.
Yeah. The question is, where is it going to go? You've got that nice support at yesterday's close. I mean, I could see it going there as a target. If it takes it out, okay, fine. But I could see it being support as well as it was, during the opening range, or right before, I should say, right before the opening range.
Yeah, and I'm just going to put a bunch of X's here.
Yep.
And all I'm doing is just highlighting swing high, lower swing high, lower swing high, lower swing high, lower swing high. And now, sure enough, we just fell out of bed and did not get our order in. So at this point, I'm going to cancel these orders because I don't think they're valid anymore. Do you agree?
Yeah, as we're making new lows, I don't think we're going to get back up to the VWAP anytime soon.
Yeah.
I'm trying to see what might be moving this. Barkin is speaking right now, and I'm not seeing anything she's saying is crazy.
Yeah.
Talking about retail sales, services. CPI is still not where the Fed is trying to get. I think we know that, right?
Well, yeah.
Kind of Captain
Thanks.
Obvious, but okay.
Thanks for that.
Yeah.
Thanks for that tip. Let's shoot over to gold really quick, Tom. Gold's down 15. Let's see if that area of support is holding. Let's get rid of that arrow. So this is a pretty nice area of support.
Yep.
Trend is down. Intraday. And remember, interday, sometimes I go back and like, what's going on interday? And then, it's kind of, yeah, we're 2 days. We have that reversal pattern we identified right now, but we're kind of stuck, right? We're kind of stuck here at the bottom. So we'll see if we break on through it right now. A lot of separation between volume weighted average price and where we're trading at right now. And the RSI is getting close to that 30 number. Not quite there yet. And then we have a little bit of a volume spike here, Tom.
Yeah, I mean, what is this? Is this accumulation, right? Are buyers just saying, wow, this is a great price. Let's just buy this. I'm not seeing that on the cumulative delta so much.
Yeah.
So we're seeing just this downward trend in the cumulative delta since about 7 o'clock, with the trend in the market. Even when we had these two last green candles, buyers really didn't come in to support that price movement. They did, but not as much as, let's say, the sellers come in and knock this market down. So this seems to be still a seller's market. And, this might be a good one where if we rally up to let's say the first standard deviation band off VWAP, it might be a good place to sell. Although, again, we might have missed that. It did last candle. We might be too late.
Well, that's okay, right?
Yeah.
The joy of missing out. I love that.
JOMO.
That's the best. I kind of like that idea too, Tom. Top of that first standard deviation band is it's right by the pivot. I'd probably go a little tick or two below.
Yeah.
Right. So 81.4. Well, let's do this in a micro just to be because we might want to try to get a set. Well, we might want to try to get a second unit as well.
Right.
Let's shoot this guy. Oopsie. What did I do?
That's crude.
Oh, wrong one. Wrong. I'm looking for gold. There we go. I saw the M and the C.
Right.
All right. Same thing. So it'd be like, oopsie. There we go. Right click. Let's see if I have it set up for this one. I do. There we go. All right. Right click. Use the chart trader. Threw an order in at 23.81.5. Again, I'm gonna put my rectangles in again. Just you think I should shade my rectangle on the inside? I took the shading out because I thought it was bothersome.
No, I think it's fine.
Okay.
Although I maybe the outline could be done a little differently.
What do you think?
I'm thinking maybe a dot or a dash, maybe a little thicker, kind of distinguishes it from those VWAP bands that they oftentimes they interact, right? They intersect, I should say.
All right, I'll experiment with that. I just put the dashes there for now. So again, this is almost looking like we're turning totally sideways here.
Yeah. Which is a case for that's a nice support area with your rectangle.
Yeah. Yeah, but with the cumulative delta, with this, I'm worried about this big volume bar here, Tom. I'm not sure why it's such a big volume bar, right? Because, the volume smile's kicking in, right? We got the apex here. It's going down nicely like it's supposed to, right? Like it's supposed to. And then we have this big volume bar right at the after, the first 10-minute candle after the opening range. And what happened? It was almost a perfect doji, right? It was almost a perfect doji. So there was a battle that was going on there for a while. And it's kind of this established price happiness and no more. So I feel like this is being bearish right now is the right place to be.
So, okay, I'll agree with that. What might explain that volume? It's a 10 o'clock bar, right? So with a lack of news, what happened here. We didn't get any news reports. We don't really have any speakers saying anything that is, lights out. Well, it might be that this market is so, that RSI might be depressed on the 60-minute, and maybe it popped up, right? So buyers come in, and that's why we see volume, but we didn't see the buyers outnumber the sellers in any way. I mean, sellers still outnumbered the buyers on that candle, looking at cumulative delta, even though we had a big move up and we have a green body. Sellers are still in control, and they continue to be in control. So the question is, how long can we have the sellers just, continuing to sell while this market goes sideways? What breaks first? I don't know.
Yeah. So good question. I'm gonna do something here. I'm gonna try something. I'm gonna just go to my drawing tools, and I'm gonna throw in order flow volume profile, and I just want to analyze 2 bars. See if that tells us anything. So what it did was we're analyzing the previous bar and the current bar, and we're looking at where the volume was. What price was the volume at during these 2 bars? That's all we're looking at right here. Right, point of control right in the middle, but we have all of these kind of competing points of control all the way up. The top of the value area, there's a big drop off between with volume here. So
look where that is. It's right at the pivot.
Yeah.
Right. So this idea that pivot can inform traders of where to put orders, I think really is reflected here. And it's not exactly on the pivot. It's maybe a tick above where we also see volume. But those volume levels all came on that one big bar where you started drawing that using the tool to draw, and it drastically reduces after we get above the pivot. So I don't know what that means. I mean, it just means that pivot is a guide for some traders.
Oh, I think it's more than that. I mean, you're right. I think it's a guide for like a lot of traders.
Yeah.
Oh boy. All right. Well, we'll see. We're approaching our target. I don't think I'm going to change this at all. Going up higher, even, there's a possibility for a 2-unit trade as well. If in fact we drive back up toward the top of this what I'm going to call target wick. This was the opening range. I don't know if that's that helpful for us. Let's see if there's any other areas of interest that we could look at other than the pivot. Pivot's pretty good though.
Yeah.
Yeah, not really. Not really. Even if I drew a fib, we'd be less than 12.5%. Interesting. Yeah, I get the sense that this market wants to break through my rectangle time.
Yeah, maybe it's a breakout trade. A breakdown trade.
Yeah.
But I like what you've done. So.
All right, we're going to keep it.
Keep it there.
Yeah, we are going to keep it right there. I'm just going through my notes over here on the right-hand side. Apologize for that, everybody.
By the way, Jim.
Yeah.
We were talking earlier about new guests to our live stream. We have a new guest today.
We do. We have a Crede. That's her first name.
Right.
It's you told me it doesn't look like you should pronounce it that way.
Right. Crede.
Yeah, so that'll be fine. I will introduce her in a couple of minutes. But you're going to have Anthony Crudele next, right?
Yeah. So we kind of touched upon the subject a little bit last week. I think we're going to expand on it, which is trading micros. So what some of the benefits, how to trade the micros, et cetera, and when you would trade micros versus trading the E-minis, right? I want to say bigs, but there's 3 levels of contracts. Do they trade the big S&P contracts anymore, or is it just more of a settlement price that they give and it never really trades?
I think a good question. I don't know. I haven't looked at that contract for years. right? All the volumes in the E-minis, right?
Right.
So
Right.
I don't think that's the thing.
Yeah. So, they introduced the contract in the 80s. Trading index futures was new. They introduced the E-mini in the 90s. Electronic trading
Yeah.
of an index, didn't trade in the pits. And then the micros were, a few years ago. So see
Okay.
this progression of being open to more and more retail traders. It's great.
Yeah, no, that's yeah, that Anthony's got that covered.
Yes.
Yeah. So that's super cool. All right, let's keep moving though. I mean, this is not like moving very fast. It's just kind of hanging out. I'm going to keep that trade idea cooking though.
Yep.
And then let's kind of look at what's going on. And Russell's number one because the stock index futures are starting to tweak up a little bit, and Russell is down the most so far.
Okay.
Based on where we're at, and this area, this rectangle I drew. Good thing I didn't place to trade. I have to move it down here. So a new area of support, but we have a dominant candle brewing right here, right now.
Yeah, Russell down the most. Well, Russell's down, right? The other stock index futures are up. Sometimes we see that when the dynamics of the index composition tell us that's the way it should be. I don't know, is the Russell a place where we want to go long? Like, is this a by the dip kind of thing and try to get back up to VWAP or point of control? Or point of control, I should say the old point of control, because the new point of control is down here with the volume. But
yeah, so if I was right, so I'm looking for that challenge. I'm looking for VWAP to be challenged right now. We have a little bit of a volume deficit, not a big one here. I'll go ahead and highlight it really quickly. And so there's a little bit of resistance here, right, in this area right now. So we're kind of bumping up against it. So what I was thinking was I would wait for a drive back to the point of control, try to get long, and then try to get short at the VWAP, right? So it'd be one of these things where I would put, at the top of the first standard deviation, lower standard deviation band also is that point of control, and try to get long right there. And then if we can get long right there and we could drive back up to that VWAP and the pivot even, then I would consider, all right, then maybe I want to get short, and maybe I want to get short times 2. So what that would do is and I really can't put this in until I get filled, but I just did it for demonstration purposes.
right.
Then I would be short. So I'm long from here to here. I'm short from there, and hopefully this volume fills in the meantime. That would be I think I'm sticking with that idea, unless you say it's terrible.
No, I think it's great. I think you need to figure out your stop. Yeah, I think that's good a place as any.
And this is an aggressive stop, folks. This isn't a small stop. This is a big stop. A more conservative stop would probably be closer to the top of the rectangle, right? Closer to the bottom of the value area. This would be a little bit more. This would be more conservative, right? This is more aggressive because we're saying we got to wick through the lows before I think this is going to change. So but there's some meat on the bone there, so be careful. And I didn't do it in a micro. I could have done it in a micro because the micro Russell right now, there's about 23,000 contracts. It's not bad. There we go. We just got long. Now I could throw this guy in.
Yeah, and I like that idea of putting your target up there. I just think that sometimes those volume divots, those volume voids act as a vacuum of sorts, right? Not a lot of interest there, more interest up there. So we enter that area. Maybe we'll get that target.
Yeah, I'm trying to envision a more smooth, a more mature, I guess I'd use the word mature profile, right? That's what I'm trying to envision. So yeah, maybe we'll get up there. I don't know. So far, so good. We'll see. And I would also probably aggressively trail the stop here too.
So when people describe you as smooth, what they're really saying is you're mature. Is that it?
Oh.
That Jim, he's so smooth.
Something like that. Or when they say, "Oh my God, look how old you got," I was like, "No, I'm mature.
I'm not old. I'm smooth.
I'm smooth." Oh my goodness. Oh my goodness. No, I have some friends that I haven't seen for 10 years, and they're going to be shocked when they see me. They're like, oh my God, you got old.
Well, when I was in Indianapolis, I might have told you I was fortunate to run into a college friend who moved out to the West Coast. He was passing through the Midwest. And yeah, when you don't see somebody for 10 plus years, it can be a shock. He looked great. He looked awesome. He did.
Wow.
Yeah.
Small world.
Well, his daughter was graduating from IU.
Oh, okay.
And I was picking up my daughter from Butler. And so since we were in the same state, he was traveling through to Chicago. We arranged it to meet. So it wasn't like we ran into each other just randomly, but it was nice.
Yeah. Got it. Well, that's nice. Nice reunion there.
Yeah.
All right. So if we still have some more time, Tom. I'm just kind of glancing across the board here, seeing if there's anything that looks pretty compelling. Crude oil's kind of just hanging out. Let's go to the June 2024 contract, which is the front month 100. Well, actually, hang on, folks. Hold the phone. All right. So this is important. I have the June still up here because it's still on the board.
Right.
There's 120,000 contracts traded. I mean, 102,000. The July contract I added also because I was checking the status of backwardation versus contango. And now we have 120,000 contracts. So, right. When do we roll over? When do we look at the bigger contract month? Now, because it has more volume. So let's click on that. So this is the crude market that I'm going to be paying attention to from a day trade point of view because of that extra volume.
Yeah.
And that's a regular volume smile there, Tom. So that's not even out of whack.
Yeah, looking pretty bearish in crude.
I'm looking for this touch point, though, at the VWAP. Again, this is my new favorite setup. Although, we are going to be arcing sideways by the time we get to it, right? So It's a little bit less like fancy, but if it maintains some kind of upward slope, that would be a really good signal. I think the sideways thing, you got, catch as catch can, but it's still on my radar screen. That's why I've put up that ellipse right there. I'll also throw in a Fibonacci, harmonic fib. That sounds pretty cool still to me, Tom.
How about a harmonic retracement?
Harmonic retracement. There we go. I know, but there's something, being Italian for, saying Fibonacci.
Yeah. But that's, you know what, Jim, I would say this.
Yeah.
That's like calling something a cannoli, like calling an Oreo cookie a cannoli, right? Here's my Oreo cannoli and you give him an Oreo. It's not the same.
That's outrageous. That's sacrilege. Those are fighting words.
That's what I'm saying.
Oh my God. Well, we're gonna well, you know what? We're gonna defer to another Italian expert. Not that I'm an expert, but we're gonna refer to Credele on this one. He's coming up next.
Yeah, we'll see him in a few minutes. But yeah, so this is looking pretty bearish. I would say, you might jump on the breakout train for this one and try to get that VWAP.
Wow.
Because I don't know what it's gonna do. Is VWAP gonna hold as support? It is upward sloping, so that's fairly bullish. But like you said, as we get there, is it going to flatten out? A lot of times when you see these moves, they come on volume, and that volume is factored into the volume weighted average price. It's right in the name. So, the question is it going to flatten out enough to be kind of a mid or neutral factor? I don't know.
I don't know. We will find out. So as you said it, I tried to put a stop in, but it was like, all right, a limit went in and we got filled.
Yeah.
All right. So another drawing tool time I found.
Yeah.
Was the risk reward.
What is that?
It's crazy. All right. So I'm going to click it. So I'm going to put where we got filled.
Yeah.
And then I'm going to go up to my stop for my second click.
Oh, you're kidding me.
and it shows me my risk reward if based on the settings of the tool. So I'm going to click on the tool itself. I'm going to
2
open
to
it
1,
up,
right? Yeah.
and I have a ratio of 2 to 1. You can make this whatever you want.
Right.
Right.
So you can
I'm
say
not a
one-
fan.
one-
I am not a fan of ratios, but
yeah.
it could help you kind of understand the risk reward of the trade you are making.
Yeah. Okay.
So anyway, I'm going to play with it more. This software is so awesome. I've been doing this for 3 years time. I'm still finding new things.
So what would be interesting, Jim, is if you had a tool, or maybe it's not a drawing tool, but it's a part of, and this could be there, I don't know, when you put in your entry, and then your exits, is there a tool that will calculate that for you, right? So it knows where you enter, it knows where your target is, it knows where your stop is. Can it say, oh, it is kind of reverse engineering, right?
Yeah.
Like
yeah.
you drew to 2 of them and it projected the third based on the setting. I want the reverse. I want to click those 3 points and see what is that ratio. I don't know if it's useful, just informational, but
Yeah. Well, and that's a good point. We don't have a lot of time to talk about, over analyzing stuff, right? That could be problematic in itself. But, there's enough stuff here that's compelling to help you kind of, especially after the fact, right? When you're done after the fact, you're doing your post trade analysis. There's something compelling to doing stuff like this to say, all right, where was I from a 2 to 1 ratio? Was I way off?
right.
All right. So, Tom, we're almost done. I know. So, Crede, I'm gonna say Sheehy-Kelly.
How about Sheehy-Kelly?
You think it's Sheehy?
Sheehy.
All right, I'm gonna go with you. Irish, an Irish person,
Yeah.
an Irish lady, is going to be joining us. High performance coach for athletes and traders. I can't wait for that. That's after the next segment with Tom Schneider, Traders Workshop, Develop Your Edge. My apologies. And Anthony Crudele coming up next. We'll take a really quick break.
Awesome. Thanks, Jim.
So, you want to be a trader? Well, you should know you're not alone. Over the past several years, record numbers of people have set up their very own online trading accounts. There's never been an easier time or more inexpensive way for do-it-yourselfers to get started trading the financial markets.
Better futures start now with the Ninjatrader mobile app. With the power to customize how you trade on the go, you can quickly and easily place trades with a single swipe and view index, financial, energy, metal, crypto, and more futures markets, and access over 40 built-in indicators plus custom indicators, all from your phone. Stay up to date at all times by enabling notifications. Get started today at ninjatrader.com. Technical analysis made easy. A starting place for new traders. When do I place my trade? Where do I set my stop loss or profit target? All good questions that traders need to answer on a regular basis. One of the ways traders get to those answers is by using technical analysis in a historical price chart.
Join over 800,000 users who trust Ninjatrader as their futures trading platform of choice. Access the world's most popular futures markets and trade seamlessly across devices, including PC, Mac, or mobile. Get started with $50 margins and commissions as low as 9 cents. Need support? We're available 24 hours a day, 5 days a week. Want to personalize your trading setup? Connect with our ecosystem of third-party developers building trading indicators and more. Visit ninjatrader.com to get started today.
Better futures start now with the Ninjatrader mobile app. With the power to customize how you trade on the go, you can quickly and easily place trades with a single swipe and view index, financial, energy, metal, crypto, and more futures markets, and access over 40 built-in indicators plus custom indicators, all from your phone. Stay up to date at all times by enabling notifications. Get started today at ninjatrader.com.
Join over 800,000 users who trust Ninjatrader as their futures trading platform of choice. Access the world's most popular futures markets and trade seamlessly across devices, including PC, Mac, or mobile. Get started with $50 margins and commissions as low as 9 cents. Need support? We're available 24 hours a day, 5 days a week. Want to personalize your trading setup? Connect with our ecosystem of third-party developers building trading indicators and more. Visit ninjatrader.com to get started today.
Welcome back to Ninjatrader Live. This is the Develop Your Edge segment of the show with Anthony Crudele. How you doing, Anthony?
I'm doing great, Tom. How's everybody doing? And today, I think I'm really excited about today's show because you have micro traders or you have e-mini traders. And I think that a lot of micro traders in instances should be using e-minis. And I think e-mini traders in certain instances should be using micros. So we're going to talk about that today.
Oh, that's great. I love that logo. It's a new logo in your background. It's always good to see some new stuff. And I think whoever designed that was great. Really like that.
Yeah, that's the new AC logo, Anthony Crudele logo. My graphics team did an amazing job with it. I told them when I first looked at it, I'm like, is that the Avengers?
Well, there is that part of it, but you capture the up and down of the market. You've got your initials. Yeah. It looks great. So, but you're right. You know, we're talking about when to trade micros today. And, you know, really it is part of that bigger picture of when you should trade what.
Yeah, you know, and I have a simple thought process for everybody out there when it comes to micros versus e-minis. And it comes down to this. Against the trend, rotations further from stop, micros. With the trend, closer to stop, e-minis. And if you just think about that for a second, you're going to get a better bang for your buck when you're trading an e-mini when it's relatively close to stop. Because remember, even if you're trading micros or e-minis, you have a dollar amount of risk allocated to your account, right? You're either going to risk $100 on a trade, 300, 500. In this show, I'm always going to go over 3 contracts and 300 just to keep it simple. We've been doing that pretty consistently here. And if I have a stop that is relatively tight and I'm with trend and I'm a micro trader, well, why wouldn't I step in and maybe just do an e-mini, especially if you could do a couple of contracts. If you have a 3-handle stop with a $300 risk, now maybe you don't want to put it all in there, but maybe you could do 2 e-minis versus doing, 20 micros, and so I think that the reason why you would want to do that is because you're going to be less active and you're going to be allowing that last one to hold. If you're going to hold for a further target, you're going to make more money on an e-mini versus a micro, right? And so I think most people over manage micros, they over trade them versus when you're in an e-mini, you're going to be a little bit better about how you position yourself, right? And so when you're going to be a little bit pickier about your entry, and when you're trailing your stop, I think a lot of times you're going to get more efficient. Now, it's going to be very specific to the instances. So Tom, maybe we go to the chart and we take a look at this today.
Yeah, and Anthony, well, the way I look at it, it's kind of like driving with or without the seatbelt, right? If you drive with the seatbelt, you can be a little more reckless, right? You drive without that seatbelt, you got to be really careful, right? Driving with, you might look at it, driving without the seatbelt is like trading an e-mini. If you're trading for the first time, it's a big risk, but if you know where your stops are, if they're a little tighter, you're not worried about that.
I think as a micro trader, you have to think to yourself, what's the goal here, right? I mean, do you always, if you're getting to the point where you're trading 10 micros, you're trading e-minis anyway, right? If you're getting beyond that, you're getting to the point where you should be in an e-mini product, and you don't necessarily need to be all in with micros or e-minis, meaning that you don't have to just fully commit. And I think that's what I really want to explain today. I think that there's going to be situations where it really matters. Let's go to the market today. Let's talk about the E-mini S&P. When we look at the E-mini S&P, the first thing we have to do is I talked about, remember, with trend or against trend. If I'm with trend, if I'm with the market environment, I want to be positioned with E-minis, right? Because I want to take the greater reward by going with trend, right? The risk is already managed. I mean, you already know how much you're risking anyway. So to me, it's all about the reward now because the risk is locked. We talk about in this show, like I said, 3 lots, $300 worth of risk. I actually have the ZN up there. I'll explain why in a second. But with the E-minis, when you look at the E-minis, right now we're in what I consider range expansion. And Captain Obvious, the trend is higher, right? I mean, you don't need to know. You just can look at the chart. You're above the 5-day moving average, but you're in range expansion. That means when the Bollinger Bands are expanding outward, that the market has probably a higher probability of expanding the range to the upside. So to me, you have trend up with range expansion. It's bullish. You see the RSI not quite overbought yet, which just tells me more and more. I've been writing about this every day in my free note that the rally's not done.
Right.
So we know that we want to be long. So when we're looking at that, and you get a day like today, where I was hoping to get on for my live micro trade. And what did I say about the micros, right, Tom? I said, if we're going to do a micro, I'm going to use them against the trend, or I'll use them for even a rotation, or if I have further from the stop. Those are my mindset. So let's take a look at the E-mini S&P this morning. Here's what I was looking at. In my Discord, I was actually talking about, I said, I think the market's going to make a run for the overnight low before it goes higher. It just needs to it needed to kind of get unwound a little bit. It was wound up so tight. You saw this morning, the tape was super choppy. Yep. This is a 30-minute volumetric chart. Tom, a lot of people keep asking me about the volumetric chart. Maybe we just pause for a second and explain to everybody how they can get this on Ninja. I think this is important.
Right. So the volumetric chart that Anthony is showing is part of the order flow package. And order flow is where we actually break down each trade, whether it was bought, was it on the bid or the ask. And we have volume data that goes along with that. And that's what forms this chart amongst and other indicators on Ninjatrader. And that's part of the order flow package where you could reach out to your Ninjatrader rep, or you can reach out to your broker and say, how do I get the order flow package? It is, just a slightly different version of the software, but it contains so much information in there that's valuable to a day trader I think you can't really live without it if you're trading.
Yeah. I mean, if you're a futures trader, and I know that there's an additional cost, if you can afford to do it, because it absolutely makes a huge difference. And a lot of the explanations that I'm going to continue to do on Develop Your Edge are going to be using the order flow package. Now, I want to show everybody. So this is what we were looking at. And Tom, last week we talked about good high or a good low, right? And so this morning, this is the first 30-minute bar, of the day. And I like 30-minute on volumetric because it lets me look at two brackets. Some of you may not know what a bracket is, but a bracket's a 15-minute. And so I like to look at two brackets. And so I'm looking at what's happening the first 30 minutes, second 30 minutes, just a 30-minute chart. I like that time horizon, and it allows me to see what the order flow is doing in there, right? And you can take it down to the shorter term charts too. I just find I end up trading too much. So I like the 30-minute. It's kind of like my sweet spot. And I like to look at the regular trading hours only. And what we look at here is just how we closed yesterday. So this is that gap between the open today and where we closed yesterday, right? We didn't make a great high up here. Remember, everyone, if you looked at last week's show, I talked about a good high. This was the high towards the end of the day. It wasn't really a great high. You saw that the volume was a little bit to the buy side offset, but it was almost offset immediately to the sell side. And really a lot of the volume took place in the belly of the last 30 minutes to an hour. And it just really didn't clean move higher, right? And so then you look at the market and you say, okay, on the close, I looked at these high volume nodes. And I talked about this as well, Tom, where I talked about that naked one. A naked one is an untouched high volume area from the prior day or from the intraday as well. We'll get to this next one here. It's any one of these. I just have it highlighted in like a turquoise color. And so you can see it, and it shows me this is a high volume area. So it was a level of high interest, right? So there was a lot of participation there. And the close. And you saw a couple of them right around this 29 to 28 area.
Yep.
So this morning we went up and we made what I would have considered in the first 30 minutes, pretty good high, right, Tom? You see that?
Yeah.
See that, everybody? You see that big high volume buy with that really low amount of volume profile. So the market had a high amount of volume on the buy side with the delta, but the market could not advance further, and it came back into the range. And it made a high volume area of right around 35. Okay.
Yep.
So the thought process is this, Tom. When this was happening, I said to myself, if this high holds for today or for the morning, where's a good place to rotate back to? Overnight low was roughly, I think it was 29 exactly. And you had this high volume node. So I drew a red line there. Right. And so go back to minis versus micros. Am I going to trade biggie minis against the trend and be able to manage risk against, what did I start off the day and say? I said, we're in range expansion, market's higher. If I'm going to take a short and I know I've got $300 worth of risk, why am I going to get short using E-minis and easily can go 3 handles or a few handles above here and stop me out? So what am I going to do? If I want to take that trade as a day trader, because I think we're going to rotate back to 29, I'm going to use the micros.
Right. Let's
pull up my micro chart. And here we go. Remember, I talk about 3 lots and $300 worth of risk. And I do this simply because it allows you, you can take this bigger, you could take this smaller, but I like the rule of 3 in. I like 1, 1, 1. If I'm going to do 3 contracts, if I'm going to do 6, it's 2, 2, 2. If I'm going to do 9, it's 3, 3, 3. I always operate in that manner.
Right.
Why? Because it's habitual for me, and it allows me to understand big, small, or not at all, right? A big trade means I'm going to get to a full position, whatever that number may be. It always is going to depend on how wide my stop is as well, right? So I might, it could be 20 contracts, it could be 3 contracts, but my stop is, depending on how wide that stop is going to determine big. So I still like to have 3 opportunities to get in. So this morning, I looked at, and let's go back to it, right? What did I say? I said the market made a high, okay? And then when we got into here around 9:55, this is my live chart, and I was hoping to keep this on. I put a stop above the prior day's high. So I was selling 2 micros, and I was risking, I didn't put it above the prior day. I put it above this bar's high right here.
Yep.
Right. Okay. 37.5. So I had my stop in at 38. So basically I had not even $3 of risk on 2 micros. I mean, I think it was like $25 to $30 somewhere in there. Right. Now my reward was 29, right? I said, if they could come back down to this high volume node. So I basically worked in OCO, and I said, if it takes out this high and it gets above this high volume node, which came in at 36.25, and it takes out that high, it gives me just a couple of bucks of risk, right? Risking very small amount to be able to make $6. So I'm making, 2+ times my risk roughly.
Right.
I like that tool that Nina pointed out. I'm going to start using that. That was pretty cool.
Right.
It's so funny too. I'm the same boat as him, that every time I'm using this platform, I continue to, it's like peeling an onion back. I keep finding more cool stuff in it. So when we get to here, I had my 2 contracts, 1 and 1. See how I did it 1 and 1. And then I just put OCOs for each to buy, and I put 29.25. Now that was the trade I took, and I used the micros. And it was simply because, once again, minimal risk, maximizing the reward, but I'm going against, what are my rules for micros versus E-minis? I am not going to use E-minis against trend. I'm going to use micros for against the trend and rotations, or further from the stop. It filled 2 of the requirements, which was against the trend and a rotation. So ultimately, you're going to use a micro. So think about this as an E-mini trader. Sometimes, Tom, it's funny. Traders want to feel like they're doing stuff. I think we've talked about this many times in psychology of trading. One of the most difficult things to do in this business is to sit on your hands, especially as a day trader. You wake up, you had your coffee, you walked your dog, maybe you exercise, you did something, you sit down and you're ready to go, and you get a tape that is just really choppy, and you're like, oh man. And all of a sudden you're trying to scalp E-minis and you just get churned up, man. And you're like, man, my day's already ruined, right? Versus being disciplined and say, look, this is actually what I would consider a quality setup, not a super high quality setup. Okay. Because I'm going against the primary trend, which is up, but I'm going where I think a good high is made, which we went over last week, for a quick rotation. Now I could risk $50, $60 if I got $300 worth of risk and just put my stop in and my OCO and let it go. It's not going to crush my day, but it also, I think, teaches you a little bit about the tape, right? Because if that stops me out, now I know, hey, you know what? This tape is really strong and continues to be strong. I know not to continue to be short. So you get that lesson from the loss. Or if I get the rotation like I did, well, that's great. You know, market actually is rotating. Let's see what happens. I actually tried to buy E-minis at 29 and just blasted off of it so fast. Right. I was like, oh man, I could actually probably buy 29s now and lean on like 25s. But I learned about the tape. Now I know, don't be short.
Right.
I really, once again, I've got to look for longs. And sometimes that just teaches you something.
And that was my question. And I think you answered it without knowing it, which is when you get your target at 29.25, you know, now are you thinking, okay, well, maybe we're game on again for the trend. Should I look for E-minis? And that's exactly what you did. Right. So it's that situational, you're adapting to the situation all the time. It's not something you determine at the beginning of the day and say, okay, this is how we're going to address the entire day, because the day changes, right? Micros for the against the trend, E-minis for during, you know, with the trend, and that's going to change during the day.
Absolutely. You know, I mean, as a day trader, you have to learn to maximize your reward while also staying in line with your risk. And it's a difficult thing if you're always trading the same size, if you're always trading the same products. I think that there is really a lot of opportunity for micro traders to use E-minis, and they're not. And there's a lot of opportunity for E-mini traders to use micros. And, you know, it's important because I think that there's a few lessons that always come with me every time I dial my size down. That really helped me become a better executor in the next moment of the market. And so like that short this morning in that rotation was like, yeah, would I have loved for it to have been an E-mini? Yeah, but I wouldn't take that trade with an E-mini because I'm not going to lose $300, $400, $500 even on a couple of contracts just to be short for a rotation back to a naked, you know, high volume area. I mean, it's just, you know, it's just like, but with the micros, I'm learning something, right? And even if you're just a micro trader, maybe you can sell 2 micros. Most of you can still risk $50 in an account, right? And be able to see what the market does. And sometimes when you dial it back or you adjust your contract size and just take a less risk, which is what the micros can be used for, you can understand the tape a little bit better. Now, the opposite goes for when you get to a situation where the market's going to give you a tight stop. And you want to be in to maximize reward, but you're still giving it a dollar amount risk with the E-minis, right? And so there's not a situation right now that's super clean for me, maybe to use an E-mini. So if I look at it, the best scenario I would see right now would be like, okay, if we come back down to 36, which is the volume weighted average price from the open, and this high volume node and this big buy area where this belly is kind of this volume, you know, 35 to 36 seems to be a pivotal area this morning. If they were to blip down there, I know pretty much that if it's not holding roughly like 33 to 34, I'm probably wrong. And this thing can come back down to the low, right? So I probably want to step in here and look to see if the trend is going to be okay with E-minis. And the way I would do that is this. So let's look about how I would execute an E-mini in this situation. Let's just say we blip down to 36. Well, first of all, I want to buy at and above my support areas. And I've talked about this. If we're in a bullish tape and I want to buy 36s, my first buy is probably going to be 36 quarter or 36 half. So I'm going to put a 36 quarter buy in. Okay. And I'm going to put just a blowout stop in at like 275, right? So I already know, let's just say that right now you're looking at, you know, I'm looking at 3.5 points of risk, $50 a point. You know, so you know, do the math, $150, $175, right? So I know that I've got $175 worth of risk in the E-minis. So I know mentally that if the market blips down there and the market just say it blasts through me, I'm losing $175. Obviously, there could be slippage in the stop, but that's where I'm at. Right now, I have $300 worth of risk. That means if my stop, let's just say I'm going to keep my stop at 275 because I know if it's not holding in here, I am most likely wrong and I'm giving it just enough room. You know, so let's just say that I'm going to use that as my stop. Where can I put another $125 worth of risk, excuse me, to be in with E-minis? If that means that now, if it's $50 a point, I can be $2.50 above 275. So if it gets above or it gets down below 6/4, I can add another one at 5/4 or lower. Is everyone with me on this? Because mathematically, I'm staying within my $300 of risk. So if I work another buy, or let's just say it blips down there, I want to see it initially because maybe it goes down to like 4.5, 4/4. Then all of a sudden I'm like, bang, buy one at 475. Now I'm long 2. What to stop there? Right now I'm in just under my $300 of risk, and now that's it. Now I let it go. Right. And so that's how I execute, because to me, I want to get my first one in. And maybe I get some value below where I want to buy, right? Everyone just gets the VWAP or high volume and they're just buying, you know, and then, or they're, you know, they're buying in front of VWAP or they're buying in front of support, and then all of a sudden it rotates below it and they've got no bullets left. This is a range of execution. Some people will say, well, Anthony's adding to a loser. No, I'm not. Because I'm plotting this out. This is my range of execution. Think about if I highlight 36/4 to 33/4, right? Because let's just say hypothetically the market blips down to 375 on this area, and all of a sudden I think a good low is made at 375. I actually could step in and maybe I buy 2 at 4 even, because now I'm only giving myself another $125 worth of risk. Understand this. Think about this. You know, you go to buy 1 at 4 even, and then you go to buy another one at 4 even. I'm not going to keep putting orders in, but I'm going to have and put my stop in at 275. Now I'm risking $125, which was additional to my 175 here. Now I've got 3 E-minis on. So I think that people don't think about that a lot, because everyone's trying to just like, well, I got $300 of risk. I'm going to buy, you know, 2 or 3 6/4 and work a 3/4 stop.
Right.
That's why I like the rule of 3. And that's how you can move between micros and E-minis.
I like that. And, you know, that range too, this new chart, the volumetric chart that you're using, you can actually see where buyers and sellers have stepped in around those prices. And you can kind of anticipate, well, there's a lot of buying at like 35, right? So you're kind of in line where the market is. You're still at a price where buyers at that level still aren't really threatened. It might be supportive. And yet, you know, you're going a little bit lower than that, but not a lot of sellers at that area too, to get panicky if it goes above. So, you know, I like that volumetric to kind of complement your risk profile and how you calculate where to put in those orders.
I mean, this is where it comes into where position sizing is so important, right? I mean, I don't care how great your strategy is. If you don't understand how to position size and to be able to maximize your reward based upon a fixed amount of risk that you already have, you know, if you are just going to be very systematic with your approach, I highly recommend even looking into some automation, just because if it's always going to be the same dollar amount and the same contract size, right on entry, right on exit, I think manually you can obviously still do that, but I think you look into more automation. And I think actually it's really a great idea that a lot of new traders go into a systematic approach anyway, because it really cuts through and clarifies what they're trying to do, and they'll get better, a better journal from it. They'll get better stats to see how they're really doing. But as you develop your edge, there is an art to execution, right? I mean, there has been times in my career where, you know, let's just say I'm going to risk, you know, $2,000 on a trade, right? And it gets down to, you know, 50 cents or 75 cents within the stop. I'll trade anywhere between, you know, 20 and 50 lots. That's how I learned even to trade bigger, because if it's getting really close to my stop, I can really step in with some real size. And I know that, oh, well, you know, that little bit of slippage could just get me out. Yeah. But it goes back to, for me in those moments, that stop is what I believe in, then that's all that matters to me, right? I mean, I think so many people get so hyper-focused on, oh, well, 36 is the VWAP or 36.5's the, you know, support. I got to buy a 36.5. Well, what's your stop? It's 33. Okay. Well, what if it gets to 34? I mean, and why would I buy them all at 6.5? I'll start to buy there, and I have a range of execution. And that's how I rotate in and out of positions. Because a lot of times what'll happen is, for example, let's just say they went down to 6.5 and I bought them, right? and they went down to 4 even and I bought them and they went 6 even bid and they couldn't get above 6.5, I dump half my position. Now I'm long from an average of 5 even, and now I've taken risk down.
Right.
Because at that moment, that's trading. That's what a trader does. Right.
Well, it's almost like insurance, right? You're offsetting something. That insurance, you put a little in your pocket, your account, to offset, that risk.
Exactly. And let's look at this. So let's just say that this would be a good high right now, right? And this is where you go back to the micros, right? You're looking, the market's trying to make a decent high actually here right now. I mean, it doesn't look like it's just quite done yet, but see how the buying is coming in. It goes back to it. This is not an E-mini setup. If you're going against trend, you're going to trade smaller and you're going to try to sell at and above it, and you're going to use a micro. Right? Because if you get burned out of it, you don't care, but you learn something, right? You donate a few bucks to the market. That's part of the business, but you never want to be stepping in and getting aggressive near stops or getting aggressive with position sizing against where we started today, primary trend. You do that with trend.
So good high, let's just review. Good high is where we see buyers step in, like you're seeing here, these big blue bars. There's not a lot of sellers there, and if it can't progress, those buyers are kind of in trouble, right? They're feeling a little bit of pain, and the market might retrace.
Well, think about it especially in this situation, as the market searching for a high right now. Because why is the market searching for a high? Because I've been talking for the last couple of weeks on this show, writing about it, social media. The market found a good low. You had a mini capitulation type low, and now you have range expansion. So the market searches for highs. Yep. And what happens is that there's always going to be people late to the party, and there's going to be rotations back into trend. And so what happens is when we're going higher like this, you're eventually going to run stops. You're eventually going to hit a point where volume comes in a substantial manner, and all of a sudden it can't move forward through price. That's how you have a good high. So what I look for is volume stepping up and accelerating at a price where we're spending little time. So think about this: little time, little amount on the volume profile on the bell curve, but high amount of delta to the buy side. That's what's a good high.
Got it. And so that would change you back to the micros, because
you look for a rotation once again.
Right.
Think about it where we started today. We start the day with against the trend. You're looking for a rotation, or you're far from your stop. You use micros. If you're close to stop within trend and we get that pullback, my favorite trades are always pullback into primary trend, right? So right now, any pullback that we see when we get to support, I'm using E-minis only.
Right.
But if I'm trying to sell a rally, which I'm not, but if I am, and I'm a day trader and I'm a scalper, I'm going to use micros, because I'm looking for a rotation.
Right.
If you get blasted being short in this market, shame on you, right? I mean, you're doing it to yourself.
Right.
I mean,
exactly.
So I know we're running out of time. I just wanted to remind everybody, not only, I know we didn't even touch base also on event contracts, and also, CME Group's got equity index options, and there's other ways to be able to manage risk through CME Group. And obviously do your homework, understand that there's a lot of products that CME Group has available. So understand that and know that, it's always situational for me, right? It depends on the situation. It's going to depend on the product. And I think in the upcoming shows, we'll do more even on event contracts or other products or other ways to stay within your risk parameters, but be able to maximize your reward.
Awesome. Anthony, thanks so much for that. Where can people find you?
AnthonyCrudele.com or at Anthony Crudele on Twitter.
Awesome. Great. We're going to see you in a couple weeks. I know next week we're taking you have deserved you've earned a well-deserved break. We've been doing this for every week for a while, so hope you enjoy your time off next week, but we'll do this in 2 weeks.
Yeah, everybody have a wonderful Memorial Day. I'll see you in 2 weeks.
Thanks for that. And we're going to take a quick break, and I'm excited to see Jim Cagnina on Let's Talk Futures with a new guest. Crede Sheehy-Kelly will be with us. We'll be right back.
So, you want to be a trader. Well, you should know you're not alone. Over the past several years, record numbers of people have set up their very own online trading accounts. There's never been an easier time or more inexpensive way for do-it-yourselfers to get started trading the financial markets.
Better futures start now with the Ninjatrader mobile app. With the power to customize how you trade on the go, you can quickly and easily place trades with a single swipe and view index, financial, energy, metal, crypto, and more futures markets, and access over 40 built-in indicators plus custom indicators, all from your phone. Stay up to date at all times by enabling notifications. Get started today at ninjatrader.com. Technical analysis made easy, a starting place for new traders. When do I place my trade? Where do I set my stop loss or profit target? All good questions that traders need to answer on a regular basis. One of the ways traders get to those answers is by using technical analysis in a historical price chart.
Join over 800,000 users who trust Ninjatrader as their futures trading platform of choice. Access the world's most popular futures markets and trade seamlessly across devices, including PC, Mac, or mobile. Get started with $50 margins and commissions as low as 9 cents. Need support? We're available 24 hours a day, 5 days a week. Want to personalize your trading setup? Connect with our ecosystem of third-party developers building trading indicators and more. Visit ninjatrader.com to get started today.
Better futures start now with the Ninjatrader mobile app. With the power to customize how you trade on the go, you can quickly and easily place trades with a single swipe and view index, financial, energy, metal, crypto, and more futures markets, and access over 40 built-in indicators plus custom indicators, all from your phone. Stay up to date at all times by enabling notifications. Get started today at ninjatrader.com.
Join over 800,000 users who trust Ninjatrader as their futures trading platform of choice. Access the world's most popular futures markets and trade seamlessly across devices, including PC, Mac, or mobile. Get started with $50 margins and commissions as low as 9 cents. Need support? We're available 24 hours a day, 5 days a week. Want to personalize your trading setup? Connect with our ecosystem of third-party developers building trading indicators and more. Visit ninjatrader.com to get started today.
All right, we are back. Let's talk futures. Hailing from Dublin, Ireland, Crede Sheehy-Kelly. Crede, how are you?
I'm very good. Thanks, Jim. You nailed my name. I'm very proud of you.
I could barely speak the English on this side of the pond. And when you get over there, all the words are a little different.
In fairness, it's in the Gaelic language, so I wouldn't expect anyone really to know it. But I'm delighted to be here. Really excited for our chat.
No, I appreciate that. Well, let me ask you, is Gaelic kind of a spoken language by a lot of folks over there?
It's a really interesting question. So there's 3 areas in the country where it's a first language and everyone has to learn it in school. So like you learn it for whatever, about 16 years in school, but most people are pretty bad at it. So there's only 3 small areas of the country where it's a first language.
Wow. Well, that's awesome. Well, I appreciate you being here for sure. And I'm so glad I found you. I mean, you're a high performance coach for traders and elite athletes. You've married these two things together.
So basically high performers. So anyone in a high performance domain where you have to perform under extreme pressure. So like traders, athletes, business people to a certain extent. I've worked with pilots, opera singers. So I've been coaching for 16 years. So it's been quite the journey, but I'm kind of laser focused now on athletes, actually mostly traders at the moment, but I'm still working with a few athletes as well. Yeah.
Wow. Okay. And then you're a PSI chartered psychologist.
Yeah, so I'm chartered as a high performance psychologist in Ireland, but it's just a little bit of a different route to qualification in Ireland than in America. So it's actually interesting. In America, my understanding is that you qualify as a clinical psychologist and then you add specializations. But I'm actually like super focused in high performance. So that was my whole education was kind of around sport and performance on the psychology side.
Well, that's fantastic. And, there's not a lot of folks like you. We have Dr. Gary Dayton, who comes on every once in a while. He's a trading psychologist. And it's such an important aspect of what we do when we day trade or position trade or whatever type of trading we're doing, is the mental game, the mental aspect of how to maintain a high level performance. And it's really a kind of an afterthought sometimes.
100%. It's like, so, and I'll be really upfront. And I hope people don't throw like virtual tomatoes at me, but I don't actually trade myself. So like my specialization is in helping people to master themselves. But what I've seen in trading, and I mean in sport as well, but there's a point where when you have the technical side down, like, so obviously that's the first thing to work on in trading. But when you have that down and you know exactly what you should be doing in the market, then the biggest obstacle to success becomes yourself, like actually executing on that plan. And that's where a lot of people fall down. And I think maybe not enough traders understand that you can actually work on your mental edge in the same systematic way that you can work on your technical edge. So it doesn't need to be this stumbling block that you fight with for like 20 years of a trading career. You can actually, put very systematic structure in place to address it and to get control of your mindset and your emotions so that you can ultimately make more profit.
So it's more than just having the set of your 10 rules, right? I have 10 rules. I'm going to follow these 10 rules. I don't have to worry about trading on tilt or FOMO.
Absolutely. Yeah. If it was that easy, I'd probably be out of a job, to be honest. But it's really about, like, people have a plan, but then when you actually go and you try and execute that plan and you find that you're not doing it, that's where this element of like self-sabotage comes in. And usually it goes as deep into your psyche as your subconscious mind actually coming and taking over your trading. So the biggest frustration is when people, they have a daily loss limit, they have a stop loss, they know how many trades they should be taking in a day or like a limit on that. And then they just sail past them all. So they don't stop when they know they should stop. Or on the opposite side of that, maybe they're feeling that fear and that hesitation and they see an entry appear, their setup appears and they don't take it. And that's all, you blocking yourself. It's something getting in the way of you actually executing on your plan. And so that's really what I help people with, is just, they come to me already with the plan in place. So they have done all of the working out on the technical side. They know exactly what they should be doing in the market. And then they're just not able to actually do that for various different reasons. And that's exactly what I help people with.
So is this part of my personality, though, how I'm going to behave when I'm in the heat of battle?
It definitely does. I mean, your personality plays into it, but also it's useful to approach it with a growth mindset. So just meaning that anything can be learned or unlearned. So what actually, for me, the biggest factor that I've seen that impacts people is, and this is going to sound like we're getting very heavy, but it's so common. Like every single trader I've worked with has had this at play to some extent, but trauma in your subconscious mind. So, or even I'll give a lighter example. If somebody grew up in a culture or in a family environment where they had a scarcity kind of mindset around money. So maybe money was scarce, or their parents were talking about how money doesn't grow on trees, or, that gets bedded into your subconscious mind. And then your subconscious rules 95% of your actions. So if you're trading, and even if your conscious goal is to make money and you have all of this baggage sitting in your subconscious mind, that's actually what's going to come to the fore and drive your trading. So in concrete terms, if you had money mindset issues in your subconscious, that could look like revenge trading, trading on tilt, hesitating to take a trade. So just really being driven by the P&L as opposed to the execution of your plan. So for me, more than personality, it's really about all of these elements of your mind that you can actually work on and change.
So that's, I'm analyzing myself now that you're saying that. I mean, when I was growing up, I had a good childhood. We didn't have a lot of money, but I had a good childhood. We weren't, wanting for anything, but we were taught, that's not worth the money. Don't do that. It's not worth the money. Don't spend it, save it. Right. That's how we were taught. And so now that I'm thinking of myself as a trader, I'm kind of conservative.
Yeah, so that's probably an example of it playing out. And I should just really clarify, it doesn't mean that if this is happening for traders, it doesn't mean that they've had a bad childhood or there's some like, really serious trauma there. It's more that your whole subconscious mind is shaped by your experiences. So a different example from what could be a very, healthy kind of positive family environment would be starting to link your self-worth with achievement. So it could be a very supportive family, but maybe the child is driven to achieve and the parents encourage that. And then the child who becomes the adult trader has a connection between achieving and then, that kind of making them feel like they have more value as a person. And so they start to make that connection. And to me, that is actually the single biggest subconscious limiting program that I see in traders that impacts their trading, is linking your trading results with your self-worth. Because if you're doing that, then there's a lot more than money on the line. And that creates much more highly charged emotions when you're trading. So the ultimate thing is to, people say they want to trade like a robot or trade like they've ice in their veins. And they basically want to remove all emotion so that it's easier to stick to their plan. But the way that you do that is actually by working at this really deep level. So, God, I've gone really deep for a light conversation. We're straight in there, but
yeah, no, and we're going to dig into that in a second. We're going to dig into that in a second. So, but just kind of marrying to the athlete part. So, I'm a father of what I think was a high performing athlete, and it got to the point where the psychological edge was more important than the physical. They've already trained, they're already strong and have a lot of endurance, and they know the sport pretty well. And then, but so does their competitor. In this case, it's another person as opposed to a market. But then, who's got that psychological edge? Who's got that confidence to win, basically? And so, do you see the same thing here in trading?
Exactly, and like you've nailed it there as well. So, like if you think of the Olympics, when people get to that level, if you're in an Olympic final, you're technically nearly on par. Like everyone who's there is technically at the best of the best. So it is those tiny advantages in how you can master your own mindset that can give you that split second of a difference that can mean the difference between winning or losing. And in trading, it is the same. It's, the similarities between the mindset required for professional elite sports and the mindset required for trading is just so similar. It blew me away when I started working with traders and, saw that kind of just how aligned they were. But it's exactly the same with trading. And I don't want to, because I don't trade, I don't want to say that it's easy to get the technical piece down because, I don't want to do a disservice to how challenging it is to get that dialed in. But at a certain point, it's there, you have your plan, you know what you should be doing. And then it really is the challenge is how do you perform under pressure? So how can you stick to your plan when you've had 3 losing trades in a row? How do you make sure that you don't suddenly start trading based on the P&L and trying to recover those losses rather than just resetting to neutral and treating the next trade as a completely blank slate? How do you detach emotionally from losses so that they don't start affecting you the following day? It's all of those small but really important ways of you taking control of your mindset and your emotions. If you can become skilled in that, then that really is the secret to success.
Yeah, I mean, so for me, if I have 3 bad trades in a row or 4 bad trades in a row, then I could tell I'm losing a little bit of confidence, which is going to make my performance the next day even worse, right?
Yeah, absolutely. And I mean, so it makes sense. I'm just like, there's so many different aspects of that. So yeah. If someone's dipping in confidence after a few trades, I mean, it's natural, like, of course, but you want to have techniques in place to maintain that confidence. So sometimes people think that confidence is like water in a glass, it drains and there's nothing you can do about it. But actually, if you start using very practical techniques, even if that happens, so it's kind of natural that your confidence would be dented. We're not saying that that's abnormal. But if you use these techniques then, and they can be really simple, straightforward things, then you can actually work on boosting your confidence in the moment so that you can maintain that level of performance. So it's like you're constantly making small adjustments and using practical techniques to stay on top of all of that. Same with motivation. I mean, if someone has a few really bad weeks of trading, then their motivation can plummet and then they slack off maybe on doing their daily review or they're not doing as detailed prep in the pre-market. So motivation is also a skill or kind of a variable that you can actually work on to keep that topped up as well. So I think it's about really understanding that all of this is within your control.
Well, and then in that scenario, then you start thinking, well, maybe I should be doing something else. Maybe this isn't for me.
Yeah, definitely. And I mean, I see that a lot with, I've had many conversations with traders where they're feeling like it has to happen now, or I have to give up because I've given this so much. And usually the people that I work with are highly motivated because they're not going to be bothered addressing the psychology if they're not super motivated. So when I see that, it always feels like people are, they want it so much. They're so passionate about trading. And when they get to that point, they're at that breaking point and they know that they have to do something different. And that's usually when they're really open to actually putting a system in place in terms of their mental edge. But it's natural. It is natural that performance would impact those type of variables like motivation and confidence. But if you put the right system in place on the mental edge side of it, they don't have to impact them so catastrophically. It's easier to just maintain that balance and keep going. So I think that's what the goal is really.
Yeah. And so traders, unlike athletes, have actually two kind of things they're up against, right? Number one is money, right? We're trading real money. This is our money. It's very important, right? And then the second part is I want to be right. I'm smarter than the market. I'm smarter than the other traders. I want to be right. So there's two levels of, two bars so to jump over to be happy.
It's interesting that you say that because, and sometimes, when people are talking about sport, they don't necessarily think straight to the professional side of it. But actually, when you're talking about money for the professional athlete, like there is money on the line. I know it's about the passion and all of that, but like there is genuinely money on the line. There's contracts on the line for how well you perform. Same with professional coaches. There's win bonuses if you win specific matches. So there is an element of it also being a career there. And even actually with an athlete, there's a lot of pressure on that because it has to happen within a certain time frame. Like, they'll be retiring when they hit mid-30s if they're doing well. And there is also that ego aspect. And I mean, ego in a very respectful way, but like in the psychology sense of the word. So traders want to be right. Athletes have a lot of pride on the line, and they, that is something very tangible that really does drive them. So I actually see them as nearly more similar than they might look on the surface. But definitely that need to be right is something that shows up so often in traders. And sometimes that's actually more of a factor in driving indiscipline in trading than the P&L. So sometimes if someone is very attached to the idea of being right, especially in their subconscious mind, then it's not really about the money that's lost. It's about the fact that the market proved them wrong as they interpret. But also what's really interesting is that if people have come to trading from a different profession, so for example, sales or the military, where you have to be right. So I've worked with a lot of people who were in the military where you have to be right, or there's pretty catastrophic consequences. People can die. And so they were taught through a military career to try and strive for perfection, to, never allow mistakes, never be wrong. And then they take that mindset to trading, and actually it doesn't serve you in trading. It's a completely different requirement when you're trading. You can't have that belief of I can't possibly be wrong, or I can never accept a loss, or it will actually undermine your performance. So that's that inability or that unwillingness to be wrong is something that can really trip traders up for sure.
So that's interesting because we've interviewed some very high level trading professionals in our shows that have verifiable track records that are looked at as as subject matter experts and great traders, and they'll be the first to admit I have a lot of losing trades.
Yeah, it's so I actually talk about this a lot. I do talk about it in my masterclass as well. You don't have to be perfect in order to be profitable. You just have to follow your trading plan. So when people get stuck in that assumption that I have to be perfect, it always has to be green, I have to end the day green, that's something that will derail your trading. It actually increases indiscipline. And when you look at the traders that make it, the highly successful traders, exactly that. They understand that the rules of the game require them to be able to accept losses. So a good analogy is like a casino. The casino doesn't freak out when people are winning on the slot machines, because the whole structure, like their entire strategy, allows for some losses, but they know that overall they're going to be profitable. So, you know, it's not, if someone wins on the slot machines, the casino management aren't losing sleep over it, because it's just part of the game. They know that that has to happen in order to make money at the end of the day. And I think the traders who are most successful understand that, they're able to accept it. I mean, it still hurts. Nobody likes a loss, but I think they can understand that that is actually what's required. Like, that's part of the job description. So it's not necessarily a loss, like one loss, that's going to derail your whole trading account. It's the actions that you take after that loss determine the impact or the consequences of it on your trading. So I think that's something that can really be helpful to people to understand, if the skill is actually to become a ninja in bouncing back and recovering from losses rather than avoiding them in the first place.
That totally makes sense. And by the way, when I go to a casino, the casino managers are smiling. They're happy I'm there.
Always.
Just so you know. Well, let me ask you this then. So one of my top rules, one of my top 3 rules is patience, right? Because we have a tendency to want to chase things. We have a tendency to want to change our minds. I'm going to move my stop because the market's wrong, but I'm right. I just need a little more breathing room. And so my number one thing is patience. Once you have your strategy set, just be patient and wait. And I have, you know, we have dopamine, we have adrenaline, we have all sorts of stuff going through our heads. How do I control that? How do I keep patient?
That's really important. Patience is, yeah, absolutely one of the key aspects of the mental edge to work on. I guess one way to approach it is to look at what would be disrupting, like what would be creating impatience. So what is it in your psychology that might be driving the opposite of that? And then to work on resolving that. So the outcome is that you are then more patient. I think that's kind of the way to approach it, rather than necessarily trying to cultivate more patience. It's like looking at what's getting in the way of me being patient and waiting for that A+ setup to appear. And again, coming back to those subconscious beliefs or a preoccupation with the P&L, so scarcity mindset, all of that, those can be the type of programs that are running in your subconscious mind that cause you to feel impatient, so feel FOMO or feel an urgency to get into the trade. So it creates emotions that then drive you to take actions that break your rules. So for example, to jump into the non-A+ setup. So maybe the setup hasn't quite materialized, but you're eager to get into it really quickly, so you don't have that patience. So it's kind of looking at where are the obstacles to patience and then removing them. And then it becomes easy to just follow the plan.
All right. So, but are there actual tools that you could use to kind of train your mind to be more patient, or to kind of follow the rules?
Absolutely. So that's my whole approach to trading psychology, is very practical. Like, you know, the same way that you would train your muscles in the gym using different exercises, we train our minds using practical exercises and techniques. And all of the techniques that, or at least that I apply with traders, are coming from usually sports psychology. So the science of sports psychology, and then applying them here. So one of my absolute hands down favorite mental training tools is affirmations. And I know as I say that, if anyone has heard of affirmations, they might be groaning or thinking like, you know, that's a bit of a hippie thing to do, but honestly, 16 years of working with high performers across loads of different domains, this is the single mental training tool that, if you do it right, can create life-changing transformation. So you can write affirmations that target patience. So for example, I wait like a tiger stalking its prey for my A+ setup to appear. So that's one of my favorite affirmations. But basically you write them into a script, and then you record that in your voice and you listen every day. So it's a tool that you can actually use to reprogram your mind at the subconscious level. So that's definitely a way. I mean, it's good to do it, to target it from both angles. So one is figuring out what are those subconscious limiting beliefs that are disrupting patience, or the dopamine and adrenaline, you know, figuring out what's blocking it. And then on the other side of it, bolstering that with like programming these deep beliefs that support patience. And that, I mean, it works. Like, I have a lot of examples of it really making a difference to people and genuinely helping them with discipline and consistency. So I think that of all the tools that I would recommend, if someone was like, I don't have loads of time to invest into psychology at the moment, I just want one tool to try out to see if this makes a difference, I would say affirmations would be the tool to try.
So that's awesome. I mean, so for me, I would, now what I'm going to do is I write things down with a pencil and, paper. I think I remember stuff better that way than just, recording it or typing it, right? Is that a thing, writing down something helping with your memory a little better?
So definitely, I mean, I'm going to be, sometimes I would be like, go stick with what works for you. But for affirmations, I'm really pedantic about it. So writing it down would help. It's better than not doing it. But actually this way of recording it in your own voice and listening every day, even if you're normally not a person that, listens to things, you're more visual or whatever, doing it this way is what reprograms your mind at the subconscious level, because it's very hard for your brain to argue with your own voice saying that something is true. So you have to be really careful about how you word them. So you'd word them in the present tense. So let's say you wanted to program being, really rich or something. You wouldn't say, I will be a multimillionaire. You would say, I'm a multimillionaire. So you'd say it in the present. And then you have to phrase it in the positive sense. So instead of saying, I don't feel any impatience when I'm trading, you would say, I am calm and serene while I trade. I have the patience of a monk or something like that. So you have to be really careful about how you word them. But I would write the script. Like, you can take a good amount of time to actually write the script and get it really dialed in and have the exact language that creates an emotional response in you. Basically, we're looking for like a buzz in you when you hear that statement. And if you get a script of about, like, sometimes it's about 40 statements long, and then you record that and you listen every day, to me, that's the most effective way of doing it. So writing it down would help, but you can't beat listening to your own voice, reading it with conviction.
You don't know this yet, but you just created a monster. I'm going to be doing this for the next couple of days, just creating the scripts and start. That's awesome. That's fit. That's yeah. So
I'm going to share the link at the end, but I have a free script that's exactly for traders. So very specifically created for traders on YouTube, and you can go to the transcript. So if you're looking for examples of statements, that transcript, you can actually find examples there, and you could use that as a basis then to create your own scripts. So all of those particular statements are targeted at the most common challenges that traders, that I see traders experience. So hopefully there'll be some in there, but it's more effective when it's in your own voice, and it's you use imagery as well in the words that evoke a reaction from you. So someone the other day on a group coaching call talked about, I think it was like having the precision of an Olympic archer when they were entering the trade. And I just thought that was a great image, because it's so, if you just say I'm patient or precise when I enter a trade, it's nice, but it doesn't quite give you the same emotional hit as the image of an Olympic archer. So you can have a lot of fun with it. Like, you can be quite creative with it for sure.
Okay, so real quickly, let me just ask you about belief perseverance, because I have this problem. So, as an example, and this isn't my personal belief perseverance problem, I have other ones, but we're having this big rally in the equity markets here in the US, and every day is an up day. Every day is an up day. Every day is an up day. So I tell myself, well, I can't go up any higher. I'm gonna get ready for the next trade. It can't go up any higher. I want to get short. And I know that that's the wrong attitude. Of course it could go higher, but that's my belief at the moment.
Yeah, and that's definitely something that I work with people on a lot. So again, it's a multi-pronged approach. So for that, I would say the fix to that is, one, to uncover the subconscious limiting programs that are telling you that. So there'll be a belief in your subconscious mind. And sorry to pick on you, but it's a good example. No. We don't have to figure out what it is, but likely there's a belief that, there's a ceiling on the amount of money I make, or I only deserve this much and not more. And that will translate into it, and it doesn't have to be that it's actually related to trading. Like, usually when they're core beliefs, they're very kind of general and simple statements. But there'll be some program in you that is creating that expectation. And then paired with that on the more surface level, it's about really, and you can use affirmations for this as well, like programming that you're waiting for the market to give you the data, that you enter the market completely, unbiased, and you're working in flow with the market and you're reading what it's telling you. And so kind of you can work at this from a very deep level and from a surface level as well. But it is a very common challenge for traders. So it's about kind of first understanding why that's happening. Like, why is that bias or that expectation there in the first place? And then dissolving it through different mental training techniques.
Wow. All right. So I'm going to tell my partner, Tom Schneider, I am the market. I am the market.
Love it.
That's awesome. All right, so let's share some links here. So you have a couple things you sent me that I want to share with everybody. We have first of all the affirmation link, and if Mission Control, if you can cut, well, let me see if I can get this to you guys really quickly here in the chat. If you could share this with the chatters in the chat sessions. This is the what am I looking at here? This is the affirmations.
Yeah,
video?
that's it. So it's a YouTube video. You'll click on it and it'll start playing. So obviously you don't have to, you can have your eyes closed when you don't need to look at images, but it's a whole script. So it's about, I think it's about 12 minutes long, and you listen every day. So you could listen to that in the pre-market as part of your mental preparation. And it's the consistency of listening every day that will make it effective. So you might want to give it like 2 to 3 weeks of consistently listening before you actually see differences in your behavior in the market.
I got it. All right. So your website is Crede Performance, and that's spelled CREDE Performance.
That's it. Yeah.
Okay, cool.
And there's a free masterclass there as well, then for traders as well.
Yeah, let's pull this guy over. All right. So, and again, Mission Control, if you could share this link with the chat, I pushed it over to you guys in Zoom. There you have it. There. When does this start? It's a free class. You could always do it.
Yeah. So there's different times that people can opt for, and so it's pretty much ongoing.
Awesome. All right. That's fantastic. Masterclass-register is the URL. Well, we're up against time. We just hit the tip of the iceberg. I mean, I feel like I could talk to you for 7 more hours and still not get everything out that I wanted to ask. So hopefully we can get you back again. I'd
love to come back. It's been a pleasure. So thanks for having me on.
That's awesome. All right, everybody. Thank you, Crede, for being here. Appreciate your time. We're going to take a really quick break, and we're going to get right back to the midday wrap-up with me and Tom Schneider.
So, you want to be a trader? Well, you should know you're not alone. Over the past several years, record numbers of people have set up their very own online trading accounts. There's never been an easier time or more inexpensive way for do-it-yourselfers to get started trading the financial markets.
Better futures start now with the Ninjatrader mobile app. With the power to customize how you trade on the go, you can quickly and easily place trades with a single swipe and view index, financial, energy, metal, crypto, and more futures markets, and access over 40 built-in indicators plus custom indicators, all from your phone. Stay up to date at all times by enabling notifications. Get started today at ninjatrader.com. Technical analysis made easy. A starting place for new traders. When do I place my trade? Where do I set my stop loss or profit target? All good questions that traders need to answer on a regular basis. One of the ways traders get to those answers is by using technical analysis in a historical price chart.
Join over 800,000 users who trust Ninjatrader as their futures trading platform of choice. Access the world's most popular futures markets and trade seamlessly across devices, including PC, Mac, or mobile. Get started with $50 margins and commissions as low as 9 cents. Need support? We're available 24 hours a day, 5 days a week. Want to personalize your trading setup? Connect with our ecosystem of third-party developers building trading indicators and more. Visit ninjatrader.com to get started today.
Better futures start now with the Ninjatrader mobile app. With the power to customize how you trade on the go, you can quickly and easily place trades with a single swipe and view index, financial, energy, metal, crypto, and more futures markets, and access over 40 built-in indicators plus custom indicators, all from your phone. Stay up to date at all times by enabling notifications. Get started today at ninjatrader.com.
Join over 800,000 users who trust Ninjatrader as their futures trading platform of choice. Access the world's most popular futures markets and trade seamlessly across devices, including PC, Mac, or mobile. Get started with $50 margins and commissions as low as 9 cents. Need support? We're available 24 hours a day, 5 days a week. Want to personalize your trading setup? Connect with our ecosystem of third-party developers building trading indicators and more. Visit ninjatrader.com to get started today.
Okay, we are back. Welcome to Midday Wrap-up. I'm Michael Burke with Ninjatrader and joined today by Jim Cagnina. Jim, thanks for being with me.
My pleasure. Happy to be here, Mike.
That was an awesome segment with Crede.
Yeah, I mean, Crede is, a trading psychologist that, I mean, she in that one little segment, I'm already rethinking my whole mental state of being. She was awesome.
Yeah, she makes you a better trader just by listening to her. She was incredible.
Yeah, hopefully they have her back.
So the employment situation still looks pretty good. Unemployment, wasn't off that much. We have good new job growth as well. So I mean, it's kind of at parity. I think we're in good shape there.
I do too. The only thing I'm a little concerned with is there's an awful lot of suggestions, and I don't have the analytics to support this right now, but a lot of the new jobs being created are part-time jobs, which I don't know if that's good or bad, but that seems to be a criticism that's happening a lot.
So it's interesting you say that because I forget what you and I aren't very good with actual numbers today, but it seems to me that there are a lot of unfilled positions as well in the U.S. And I'm wondering if that is, optimism that they may want to hire those people, or they're actually positions that they want to fill. How many of them are part-time positions that they can't fill? So that's another number that we don't talk about that much, but there is a large number of unfilled jobs in this country.
Yeah, and we get that with the JOLTS report every month, so I'm looking forward to the next one.
So the only thing, let's go to a 5-minute ES chart here. So 8:30, all that news hit. There was a little bit of selling, but we didn't really get a giant bar at that 8:30. We got a pretty good one. There's a peak up here. We had a high near 53.40. We had a low on that same bar, 10 points below that, but not a ton of volatility at the 8:30 mark. The only thing that seemed negative to me was the Philly manufacturing index. So that came in a little under expectations at 4.5, which is still a positive number. It's important to note, by the way, that number has been positive for the last 4 reporting periods. But before that, it was negative all the way through 2022. So actually, this kind of peaked up a little bit. And but what do you make of that? Do you think that had any impact on that downturn after 8:30?
Maybe a little bit. I mean, it's hard to tell when you have a data dump like that. We had housing stats, we had import exports, we had jobless claims. So when you have these 4 reports hitting the street at the exact same time, it's hard to tell which one has primacy. In other words, which ones traders care about. But the Philly Fed number was a little bit of a miss, right? It was estimated to be 7.8, and it was only 4.5. So I think it had an impact.
And that comes on, that comes on the heels of the Empire report, right, which was also negative. That number was underwater quite a bit. So it's interesting. I don't understand these regional reports that well, but it's something that we look at. Any other economic things that jumped out at you today?
Not really. I mean, the housing permits were down, and housing permits leads obviously housing starts, because you need a permit to start, and there's a lag or delayed effect. So I like to focus on the permits, and this was back-to-back negative months here from a percent point of view on new building permits, which might suggest things will be slowing down for new houses.
So anyway, we're looking at this 5-minute. We're back above the high of yesterday. Playing around that 53.47 level or so. I'm pretty sure these are all-time highs. Let me just look at that. I believe that is the case.
I
So
think you're
yesterday
right.
yesterday we closed at 53.37, and the high was a little bit above that, not much. 53.37, yeah. And so the high over here, or is it the high of this one here? So that high is 50. Yeah. So this is an all-time high today.
Yeah.
This is an all-time high. It'll certainly be an all-time high close. In my mind, anytime you're hitting an all-time high, that's that's obviously bullish.
So would you expect, so when you say it's bullish, would you expect to have an immediate effect? In other words, tomorrow should be an up day, or next week should be up day, or by the end of the month we'll be up even higher? I mean, do you have like a time horizon?
So, it's funny because, every time in my mind, every time we hit a new high in these markets, there's a number of traders who are sitting on the sideline thinking it's too high, it's not going to go any higher. And now they're saying, I don't want to miss out on this if it makes another leg up. So I usually have the bias that whenever we make a new high, the next day, at least there's going to be an excursion higher than that. Not necessarily end up the end of the day with a new high, but there's going to be some excursion sometime, either during Globex or during the opening range on Friday. There'll be some follow through. That's my expectation. It's short term.
Yeah,
it's short term because anytime you're at these high levels, at some point, all the people who are long are thinking, well, I'm going to take profits here, and it puts selling pressure on.
Yeah, and it reminds me of what Larry Williams told us about Jesse Livermore. The idea of when you do make a new high, then buy some more. Make a new high, buy some more, and that's how longer term wealth is created, according to Larry's analysis of Jesse Livermore, and that makes a certain amount of sense.
Yeah, I think so. I mean, a lot of a lot of traders are, in this mode where they want to, trade intraday, go flat at the end of the day. But a lot of times when you're in a trading mode like this, where it's bullish, if you manage your risk correctly, a swing trade could also make sense, where you're actually holding that position, maybe not holding it over the weekend. That may be a little too much risk, but certainly holding it intraday Globex session overnight, that could make sense. Obviously the margin jumps up and that kind of thing. But I agree with you. Guys like Larry Williams, they made their money holding longer term swing trades.
Yeah, and the other thing that's going on, it seems like there's a lot of interviews online or on the TV where money managers, financial advisors, and economists are saying, yeah, in the S&P, we're going to get to 5,500, we're going to get to 6,000, and then and now they have to turn around and advise their clients, their customers. Yeah, we're going up here. Let's buy some more. And so that's kind of a rotating, self-fulfilling prophecy, kind of.
Totally. I totally agree with that. And, that drives a lot of this. I haven't looked at the inflows of mutual funds lately, but, everybody who's working contributes to a 401k. A lot of them don't manage that well. They just put it in like an index fund. And those funds have to invest that money, and they invest that money by buying stocks. And that drives us all higher.
Yeah. Exactly right.
Let's look at the daily here. I was looking at VIX. VIX has been in bullish territory under 15 for quite a while here. And yesterday VIX really took a dive under 12.5 into a very bullish kind of stance for those market makers. And, again, it's just, all of the stoplights are green here. We're looking at, we cleared 5,300 very easily yesterday. The VIX is in a very low level. We're higher today. Even my stochastic RSI is not overbought yet, if you can believe that. So, I mean, we've had this great run, but based on the momentum in this market, stochastic RSI is still saying there's a little bit more room. And so, I think we're in a good spot here.
I agree. Yeah.
Let's take a look at, just real quick, let's just do a run through here. This is the Russell, it's down 7 points today. So bit of a bearish inside bar here. Let me go to this other daily chart here. This market very overbought on the RSI stochastic. You know, this market has struggled to get over 2100 and stay there. Today we're down a little bit, but we're probably gonna close above 2100. I think this is maybe just a healthy little consolidation before we make another run up. I have high hopes for the Russell, Jim.
Yeah, no, I do. The behavior, I do as well. The behavior, this is the one where the behavior is a little bit different than the other three majors that we track, right? It doesn't march to the same drummer all the time. It does a little bit of sometimes it lags behind, sometimes it leads, but there's a lot of upside room here.
I completely agree. I mean, if you know, right now there's talk of no rate cut, which should be bearish for this market. This market's looking for lower interest rates, and but the market is in fact lowering interest rates. Today we're up interest rates. The 10-year yield's up a little bit, but you know, this market seems very comfortable now with the fact that there may not be a rate cut this year.
Yeah, no, and that's the surprise, right? That's the thing. Higher for longer was a scary idea 6 months ago, and now it's accepted as the paradigm.
We're making all-time highs, for heaven's sakes.
Yeah,
you know, so certainly they've accepted that in my mind.
So I'm wondering if they start cutting rates, will the market break?
Yes, exactly. I think the three of us were talking about the fact that if there was a rate cut, that might signal that the economy is in trouble, and could move the market down instead of moving it up. It's interesting. There's a lot of dynamics here. Let's look at crude oil. We rolled over today to July, and I have July and August now in my market analyzer. So this is something that you point out all the time, Jim, which is really fascinating, and that is that prices for crude oil in the future are lower than the current contract month, the spot prices. And so that's pretty interesting here, that expectation that crude oil is going to be lower, not much lower. It's almost a parity. So it's almost not a thing, actually, even though I'm bringing it up. But that is interesting. That's not the norm.
Yeah. And if you track, right, that's backwardation. If you track the December contract, December's trading at 76.11. So there is over a $3 spread between July, $3 spread between July and almost a $3 spread between July and December.
That is incredible. That's really incredible. And it shows you the bias of those commercial traders that they're thinking, I'm not going to be buying crude oil in those months. The big refiners, those kind of hedgers are saying that, you know, crude oil is only worth this amount in September. It's an interesting dynamic.
Yeah.
But here, this is the daily, Jim. We've been sideways in between that 78 and 80 channel for almost 3 weeks now. Every time we get to one edge of this channel, it jumps back inside. We've dipped below that 78 level a few times, but always it came back. You know, the price happiness here seems to be 78.50 or so.
Yeah, and my experience with this market over the years is it does, when it gets into that sideways channel, it stays there for a while. Now, having said that, of course, OPEC Plus, you know, we'll see what they do in a couple of weeks. Maybe if it's status quo, then again, it might be kind of a sideways price action.
It's interesting. So one of the things that is interesting about this chart is that we have a double inside bar. So in other words, we have that big red candle on Tuesday, and then both days, Wednesday and Thursday, are inside that candle. In my mind, you know, you could call that on yesterday, you could call that maybe a bullish engulfing, green candle. You know, today, again, you could call it a bullish engulfing, but in my mind, two bars in a row, we can't get above the open of that red candle. I think this is bearish, and I think we'll probably see some downside follow through tomorrow. What do you think?
Well, I agree that because the previous, not this candle, but the previous one is almost like a doji, right? With a big buyer's wick at the bottom. And that suggests to me market uncertainty. But sellers tried to move it, but it would not with a lot of conviction. And so now we're back to where we started from. So we're a little bit uncertain. So then when I think about it, really, we're looking at an inside bar from that the red candle, the big red candle 2 sessions ago. And I don't know if I'm bullish. Me personally, I'm kind of neutral with that position right now. So I don't know.
So it's funny. Today's candle is actually engulfing yesterday's candle as well. So there's a bunch of we need Tom Snyder here to interpret this this pattern here. By the way, yesterday, if you look at yesterday's candle, that was a key reversal. We had a low that was lower than a lot of bars to the left, and we closed above the close of the previous bar. We expected some follow through. Tom and I talked about that today, and we got that follow through. So that key reversal played out just like we thought it would. Yeah,
it was good.
Let's go to gold real quick. I didn't have that on my list, but we'll take a look at this. This is another this market. Wait, it hasn't come up yet. Hold on, there it is. So this market is really kind of navigating that little bit wider channel, right? This it doesn't want to let me click on that. Hold on one second. But this is another one of those markets where the channel is defining the price action. I have that channel drawn from roughly 23 to 24, and we just can't seem to break out of it. Yesterday, it looked like we might get some follow through today and break out, but again, sellers came in at that 2400 level, and we've got this little key reversal bar. I think we're probably heading back to 2350 again.
Yeah, no, I agree. We talked about this with Jimmy yesterday a little bit, Jimmy Iorio, and it's like 23 is the new 18, right? we were here at 18 forever. Now it's 23 forever. But no, I think so. I think that there is a certain amount of risk, and this might be a little contrarian, but I think there's a little bit of a risk on in the marketplace right now. We have a lot of cash that are moving in, and I think this is going to be a beneficiary of one of those. It's
interesting you say that, because this is a market that I know that there are a lot of people who hold gold. They hold physical gold. They watch the spot gold price. They watch the futures, and they were very encouraged by the run up to 2300. And there was chatter that this could go to 3000. I'm sure all those people are hoping this continues to go higher. I definitely think if we can break above that 2400 level, that there really isn't a ceiling on this. Maybe we could go to 3000. There's nothing to the left here. These are all-time highs once we get above that 2400 level again.
And it's such an international market for so many different reasons that I got to think that more money is going to flow into it.
I think you are correct. Tom and I were talking about the euro. The dollar had been weak for the last couple of days. Today, the bonds are down a little bit. The dollar is up against most of the major market currencies. The euro, though, on Monday, Tom and I were talking about, it broke above that 108 level. That had been a strong resistance level for a little while. And then we just had these really two stronger and then stronger yet bars. Today, we have a little bit of a key reversal pattern happening right at that 109. So 109 was a strong level back in March as a support level. It acted as a resistance level a little bit later, and now we're back up there. This is probably a tough level to get through.
Yeah, the other thing to consider is there's an awful lot of ECB members talking about conditions being ripe for a June rate cut, which will increase the differential between FOMC and ECB, and that could cause some downward pressure on the euro.
That's interesting. We'll keep an eye out for that. Any market you want to look at, Jim?
Let's look at the, if we can, Mike, let's look at the 30-year, but you have the ZB up there, 30-year bonds?
Yeah, of course.
I like looking at the long end of the yield curve. It does behave a little differently sometimes than the middle 10-year that's always quoted on the TV and in the media. and the 2-year, which is the shorter end. This is the 30-year U.S. Treasury bond. It's been a mainstay for a long period of time. And you could kind of see we caught a really nice bid, I don't know, 2 weeks ago or whatever, and we keep trickling upward as well. So when I'm kind of, in addition to the Fed funds tool, when I'm thinking about hawkish versus dovish, I look at these prices too to see where they're going, and they are trickling upward.
Yeah, it's interesting today. We are below the open right now, but we are really very close to the previous close. So this market is, even though we've got a red candle up here, looks a little bit like a key reversal up here. The fact is that, we're not anywhere inside of yesterday's bar. So this, in my mind, is still a continuation. We have a higher high and we have a higher low. This is, the color of the candle here or where this opens or closed doesn't really matter. Those two data points tell me that there's still more upside room here, especially here. We've cleared the Ichimoku cloud. We have some resistance with that 126 moving average at 119.5, but for the most part, I'm at 119.25 actually. This market looks good. The only downside, if you look at the bottom subgraph, Jim, is that's my RSI stochastic. That is peaking out here at overbought. And in my mind, I'm not ready to pick a top or a turning point until that crosses back below that 0.8 level. So this could stay up here for a while. Notice though, in that indicator, we haven't been back up there since all of this year. So we haven't been over, and this market has been in a downtrend, obviously. But this spike up is based on the fact that we've been in a downtrend so long that even the slightest uptrend is going to trigger the RSI and the stochastic, and that's what we're seeing here. So I think this has more room to go. I'm not concerned about that overbought situation here, not yet anyway.
Yeah, and if you go to, I see 1, 2, 3, 4 lower highs, and if you go to April 1st, that would be a target for me, right? Is this just another lower high, or are we going to start making some traction on the upside? And I would use that April 1st gauge, that peak we saw. I think it's April 1st. Right there is kind of my litmus test.
Yeah, I like that. I agree with all of that. So, Jim, this has gone by super fast again, as always. Thanks so much for being with me.
My pleasure.
Tomorrow, you have a Platforms Unleashed. You're going to be talking about time and sales and market depth.
Yes, sir.
Those are data tools that support, all of the other technical stuff that we see in charts, and it's important to understand how market depth works.
Yeah, absolutely. And the Ninjatrader software is pretty powerful on both those, so it's going to be good.
That's cool. And there's a new feature in time and sales too. So I think Jim's going to be talking about that as well.
Yep.
Tom will be on with Brian Shannon tomorrow talking about Anchored VWAP.
Yeah, it's going to be awesome. Brian's great.
Is there a book giveaway at that session? Or is that something else? Am I conflating?
No. We're going to tell you how to compete for. I have an extra copy. It's a hard copy. It's like a textbook, but it's really good. And I just finished it. It's really awesome, and we're gonna give it away to somebody. But you have to attend the Brian Shannon session.
Outstanding. And then midday wrap up tomorrow. I'll be back with Ryan Krebs with the Ninjatrader ecosystem, talking about some cool partners that we have in the ecosystem. So that's always fun. Ryan is great. And then this afternoon, Jim, you've got bars closing.
I am. I can't wait.
Okay. Thanks everybody for being with us. Jim, thanks for being here. Good luck in your trading this afternoon. And we'll see you at bars closing at 3:15. Bye, everybody.
All All of the symbols, trading ideas, and live trading are for demonstrational purposes and are not recommendations or trading advice. Past performance may not be indicative of future results. All of the information and opinions expressed by third-party guests are their own and are not necessarily those of Ninjatrader LLC. Trading futures involve substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the Ninjatrader website.